Dr. Randela. Good morning, Dr. Randela.
Good morning, and how is the morning?
Good in yourself, my brother.
Still early to tell, man, but so far so good.
Exactly, but it's very cold. Are you in Cape Town or Pretoria?
Pretoria.
Yeah, but it's cold here, and I think it's hot over there.
Yeah, here at least it's much
Yes.
better than Cape Town.
Nah,
Yes,
nah, that's fine. Thank you so much, my brother.
sure.
Morning once again, colleagues. I've already made Yurik and Rajlal co-hosts, ne?
Yes.
Yes, thanks. Good morning.
And who else? I think it's the two that I received, but I'll check and confirm.
Good morning. I think it should be. There's another colleague from the Jobs Fund, Najwa Ali Idris, as well.
Yes.
Should be
Yeah, I will confirm.
Yes.
I do have the communication, and thank you so much. I'll do that now. No.
Okay, and then we're also joining from the National Treasury screen from Cape Town. So yeah, you'll see us also our names, Ulrika and Ravesh, and then we'll also join through our screen from Cape Town as well. So we're just going to join now.
All right. Yeah, how are you?
How's it? Good, man. Excellent.
Good. Yeah, it's winter. You can see us that we do have some jackets.
We're in Cape Town, so we know.
Oh, you are? But now I think your room is just so warm.
Yes, it is. It is. Okay, so
Yeah.
we'll join now. Yeah, I think we should join. There we go. Okay.
No, that's fine.
Cape
Thank you
Town
so
screen.
much, Mugwe.
Thanks,
You're
Sat. We'll see you later. Thanks.
All right.
Good morning, honorable members. Good morning to the team at National Treasury. Just want to check if I'm audible. Honorable Waitlin, I see you are on here. Are you there?
Recording in
morning.
progress.
Very audible, and we can see your suit and tie.
Thank you. It is great because when you meet with the National Treasury, you need to wear a grey suit. It works well. Honorable Bateman, are you there?
Good morning to you, Honourable Chair. Yes, very well, thank you. How are you?
Well, thank you. Can I just check if
I've
team...
broken with the grey tradition today.
You'll never make a good accountant in that instance.
Thanks.
Because you've heard the saying, the extroverted accountant is the one who looks at your shoes, not theirs.
Okay.
Is the team at National Treasury? I can see the boardroom there. My eyesight fails me. Can you hear us okay? And if you could feed into the mic so we can know technically we're sorted.
Good morning, Honourable Chair and Honourable members. So Ravesh and I are in the boardroom, so this is Ulrika Britton. And then we have a bunch of colleagues online too.
Okay. No, that is great. In that instance, I will... Is the Minister of Finance on here? Just so that before we proceed, we can get on with it.
You said Minister. We are checking, Honourable Chairperson.
You are checking or you are clicking?
No, we're checking if the Minister has joined.
Okay.
And it seems not yet.
Okay. Well, we need to get going. So Mashile, if I can ask you to present the agenda for today, then we can get going. It is 9:02. I think this particular meeting established today is with the purpose of, as it complies with our founding legislation, to get a quarterly briefing on expenditure from National Treasury on Q1, and then obviously the document that we've been working on, which is the committee's own strategic plan. We will go from there. So, honourable members, there have been a number of items that sit on the agenda. There's a lot of work that, because of many of the delays that we've had, we've almost have to play catch up with National Treasury today. So I really want us to be thorough in the work that we do extensively. So if I could, in looking at the agenda as it's been presented today, ask if there's a member who would like to move for the adoption of the agenda.
I'll move, Chair.
Thank you, Honourable Waitlin. And I see Honourable Bateman, you've got your hand up. I will make the safe assumption that you are seconding.
Correct, Chair. Thank you.
I can see, may I ask, just for purposes, simply because it is protocol, if members can, as best when they're speaking, to get their videos on. I think that it is the work that it is very difficult on virtual platforms to convene meetings. I'd much rather have them in person, but as I troll through the corridors of Parliament, realize the limitations of venues. So, in the light of that, with the agenda duly adopted, we will. Someone from National Treasury, can we just finalize just checking where the Minister of Finance is on? While you just and then just give me a thumbs up when they're ready. Let me just take through a number of apologies for today. We have received an apology from Honourable Kwankwa, who is on official business. We've also received an apology from the Deputy Minister, Honourable Asho Sarupin. Those are the two apologies I have. Let me Mr. Maubane, are there any other apologies from anybody?
Good morning, Chair, honorable members and official and guests of the platform. These are the only apologies we've received so far. Thank you so much, Chair. Back to you.
Thank you. From any other honorable members from parties, are there apologies that we need to recognize and acknowledge? Okay. It would seem that those being the only two apologies that we acknowledge, moving along with the agenda for today, I am now going to open up the floor. The documents have been respectively sent. There are a number of documents that we have to deal with today that come from National Treasury. So I think what we've got to do is keep the presentations going, and then we'll allow members to interact and deliberate on such matters. Honorable Wakely, I see your hand is up.
Thank you, Chair. Can somebody just direct me? The only document I received was last night for our strategic plans. That documents are received, but I've not received anything from National Treasury. I don't know if that presentation only will come after the presentation. Thank you, Chair.
No. Those documents were sent a while ago. Mashile?
Yes, thank you so much, Chair. Yes, indeed, Honorable Wakelin, the documents were sent last week, Friday or Thursday, and hence there was a communication over the weekend that the documents for the National Treasury have been sent. Yes, if you check the email, the documents for Friday last week or Thursday, they were sent. Yeah. I'm not sure if it's only Honorable Wakelin who's got the problem with that. Otherwise, I can.
No. He sent a thumbs up now, which means that he withdraws unconditionally.
Thank you so much.
In the light of that, let me ask from National Treasury if I can just double check. We have not received any apology from the Minister of Finance, and so can we just double check whether he's on or not?
Chair, I am told that the minister is on the cabinet committee. I'd assume that they would have sent an apology through from his office. We are checking with them on whether that apology was then sent through, but we were only informed in the last 10 minutes that the minister has joined the cabinet committee.
I want to express that it is to me a fairly obscure anomaly that the Minister of Finance has not made these particular meetings. Secondly, I think it is unacceptable given the fact that I'd specifically written to their department to request his presence. Thirdly, the economics of the issue simply can't be that the committee operates and the finance has got one minister, two deputy ministers, that they can't be at this committee meeting. I find it unacceptable. And like I say to you profoundly, that we need to give expression as a committee to absolutely my unacceptance on this regard. It's simply not the way we want to operate. We've always worked with the Minister of Finance in this regard, and I just think that it is unworkable for us as a committee, at least, to not be able to have any input from the political principal and the cabinet member and the Minister of Finance. I just think it's unacceptable, given the communication we've put forward. I've requested previously for his presence, formally so. So to not even get communication about an apology is to me unacceptable. And I need to express that. I saw Honorable Kalega Mazibuko's hand was up.
Well, thank you very much, Chairperson, and good morning to the members on the call. No, Chair, I was just going to echo some of the words they've already echoed, and maybe to add that the has deputy ministers. If the minister then is unable to attend the meeting, at least the deputy should be part of this meeting, because these committee meetings or the standing committee meetings on appropriations is very important, and the issues that we are addressing here, with the National Treasury. So otherwise, I do second your concerns. I think these are the concerns of just not yourself, but of the committee at large. And that message should. Thank you very much.
Thank you, Honorable Kalega Mazibuko. And in the light of that, what Mashila, I'll request that you do is to note the input. If I could ask the team at National Treasury to then convey the message, and I will formally write to the Finance Department to request that really it undermines and underserves the committee. But forget even that's the nature of the committee. The nature of the engagements with finance cannot be left only to when we're engaging on budget matters. It is legislated that these quarterly reports need to be tabled, and I would urge that the Minister of Finance be here at the next meeting. So in the light of that, typically we would proceed and say, well, I want to allow National Treasury to then present the documents, and we will reserve some of the issues that also need to be discussed. But I really sometimes don't want to underscore the value of these meetings and simply just say, well, fine, let's just move on to the next agenda item. But it's not helpful given that I don't want to undermine our own founding legislation. If we're another committee, I think I might have been persuaded to simply say, let's move this meeting to another day. It's just so that we can allow the political principles to come through. But in this instance, there are legislative issues that I want to uphold. So let me hand over to the team at National Treasury. I'm assuming that either you are leading from Pretoria. I'm not sure if the DG is on. I'm unclear at this point in time. So let me allow the team at National Treasury to guide me as to how they'll take the presentation, and then we'll go from there.
Okay, thank you, Chair. So as I had said earlier on, I'm Ulrika Britton. I'm the DDG for Public Finance. And with me in the room here is Ravesh Rajlal, who is the acting DDG for Assets and Liabilities. Chair, you have asked us to present on a series of things and issues. Some of these presentations are quite long, so with your indulgence, I'm going to ask that maybe we skip through some of these issues, maybe on the public entities, or at least the Schedule 3A public entities that we have the fourth quarter expenditure for that's included in the presentation. Jay, you've also asked us to look into some financial governance issues around consequence management in relation to goods and services. We will be giving you an update on SARS. We'll be giving you an update on the affairs of the state-owned companies, an update on debt, and as you had requested, an update on the jobs fund. So Chair, with your indulgence, I'm going to go straight into that presentation. But maybe I should just say before I get into that, is that we will be conveying your message and the committee's displeasure that the Minister of Finance isn't here. We will do so. So let me just go straight into the presentation. So there's a series of us presenting, and it's a series of presentations. Some I will flight and some will be flighted by other colleagues. And so I'll be doing the first part in relation to the first quarter expenditure of national departments. I'm going to skip over the Schedule 3A public entities, like I said, and then I'll hand over to my colleague who's on the call to give us an update just on where we are with SARS, like we had committed to doing. And then lastly, then the colleagues from ALM and the Jobs Fund would then come in. So just an outline on how we're presenting today's expenditure for national departments. I'm going to go through this quite quickly, just because I'm assuming that I'll take it as read. So we have a total underspending in the first quarter of the year of about, or not underspending, slower than projected spending of 11.4 billion rand. It's mostly on transfers and subsidies. So that's the red bar on the right-hand side. Of about 40% of total slower than projected spending is in transfers made to other institutions, provinces, and municipalities. The departments that have recorded the highest overspending or higher than projected spending is the Department of Home Affairs and the Department of Defense. In Home Affairs, this is mostly related to goods and services and capital assets. In defense, it's across all three economic classifications, and I'll detail that a little bit later. So that on departments that have underspent or have slower than projected spending, we have 6 departments here. In higher education, this is related to slower than projected spending on the Sibusiso Bengu grant, which is an equalization grant for previously disadvantaged universities, and on payments for capital assets in relation to slower than projected spending on infrastructure projects at community colleges. The slower than projected spending in health is related to the NHI indirect grant. In social development, it is related to lower beneficiary numbers than projected. In police, it's mostly because of vacant posts that haven't been filled. In agriculture, there's a bit of an anomaly here, Chair, in relation to agriculture, and you'll see that they have lower than projected spending across all 3 economic classifications. And this is mainly due to the reorganization of government and the split in the department and having to set up new systems related to making the department function. And lastly, in the Department of Transport, it's related to slower than projected spending on goods and services in relation to invoices that they expected to have paid, but they didn't, and a transfer that was not made to SANRAL. So this is just the next few slides, just details what I have already said. As I had explained about the Department of Agriculture, part of it is related to the reorganization of government, and part of it is just some accounting issues that we have encountered in the system in relation to some updates on BAS. That will be fixed, so we're not too worried about all of those things, but we are worried about when we do reorganize government, that it does cause some disruption in the operations of departments, and it definitely comes through in the Department of Agriculture in that way. In police, like I had explained, mostly due to vacant posts, but also some slower than projected spending on goods and services. In the Department of Employment and Labor, so let me just go through through spending on personnel, because this is what we've done. Is like I explained on police, it's in vacant posts, so they have over 2,000 vacant posts that they are trying to fill. We also have a similar issue in the Department of Employment and Labor. And when it comes to higher than projected spending on personnel, this is the perpetual problem that we have in the Department of Defense that results in unauthorized expenditure at the end of each financial year, where there's a mismatch between the budget and the number of people in the department, and in the different parts of the South African Defence Force. In international relations, the higher than expected expenditures on personnel is related mostly to what happens on exchange rate fluctuations and having to pay salaries in foreign currency denominations and foreign currency transactions. In land reform, so this is the other part of agriculture where you're kind of seeing these imbalances that we would have to fix, is that they have higher than projected spending on personnel related again to the split. So on the one side, you're seeing the problem in agriculture. These were they were one department that was in split into 2, that has resulted in some of these imbalances that we then have to fix. So there's higher than projected expenditure here versus the lower than projected expenditure in the other in the Department of Agriculture. On goods and services, so let me just make a comment in general about goods and services. In some instances on goods and services, so where we do particularly see higher than projected expenditure in goods and services, this is in relation to accruals. So they're mostly related to accruals. What this is that at the end of the financial year, the departments don't necessarily pay all the invoices in an attempt to prevent unauthorized expenditure or overspending in that area. So they withhold the payment of these invoices that then results in higher than projected expenditure in the first quarter of the year, as they then pay these invoices later. So this is almost like a balancing of the cash positions that they do in relation to spending on goods and services. And when I get to the higher than projected expenditure for those departments, that is almost always the case. But we do have lower than projected spending in forestry, fisheries, and the environment that is related to the employment programs and the slow recruitment of people in relation to working for water and working on fire, etc. I had already explained what's happening in the Department of Agriculture in relation to the reorganization of government. And in police, this is really related to slower spending on not receiving invoices as planned in relation to computer services and fleet services. When we get to the higher than projected expenditure, I already explained, so for Home Affairs, correctional services, and that is related to accruals. In defense, it is related to expenditure for the additional support that was provided to the SANDF in the Eastern DRC. Then when it comes to transfers and subsidies, like I explained for social development as a full, in relation to the vote, that we have lower than expected spending on grants, and because mostly related to lower numbers of beneficiaries. In agriculture, we have this in relation to transfers not made on conditional grants. And usually what happens here is that there's a mismatch between planned expenditure and how we project to do this and what actually happens as conditional grants at the beginning of the financial year. It's dependent, the first tranche payment is dependent on a business plan or meeting specific conditions. When those conditions are not met, then funds are withheld. In trade and industry, this relates to again, also an MOA that hasn't been finalized in relation to the Social Employment Fund. And similarly, with disbursements on the Tirasano Construction Fund that hasn't been made, partly because, and this might be a planning issue, because we only disperse the funds once the construction companies actually deposit the money into the National Revenue Fund. Higher than projected expenditures in water and sanitation on transfers is related to payments made earlier than planned to the water trading account for various capital projects. In health, this is again a misalignment between the projections that we have on the indirect grants, or on the grants in the same way that we had in agriculture on COSP. In police, this is related to claims that have been settled. And in health, we have lower than projected expenditure. So this is, I think, in all three cases now, in both health and water and sanitation, this relates to indirect grants and the expenditures on indirect grants and payments for capital assets. So where there is slower than projected spending, again, as capital projects within health on the regional bulk infrastructure grant, on the water services infrastructure grant is then made. In relation to, it's the same case in basic education, where this is also related to the indirect grants, where implementing agents don't necessarily perform in the way that they should. Then I've already explained defense and the broader problem that we have in defense. Rural development is again partly an NMOG issue in relation to agriculture, but also around accruals that needed to be made around land reform initiatives. Home Affairs is part of it is accruals also, but a lot of it has got to do with just kind of the modernization project that Home Affairs is undertaking. Then Chair, just you had asked us to give you an update on what's happening within the direct charges against the National Revenue Fund. As you can see from the slide, the provincial equitable share, the debt service costs and transfers that we make to SETAs forms the largest components of the transfers or the payments that we then make as a direct charge against the National Revenue Fund. And in most cases, we seem to be on track in relation to where we are, except on debt service costs, where we do seem to be a little bit slower than what we had projected. And I'm assuming the colleagues from assets and liabilities would explain some of these dynamics a little bit later. Chair, I'm going to move on, and I'm going to go straight into slide. So I'm going to skip all the slides on kind of fourth quarter expenditure of Schedule 3A public entities. So there are 20 of them that we report on, and each of them have some detailed explanations about what's happening in public entities. And I'm going to go straight into slide 95. And I'm going to ask my colleague from tax policy who's on the call to just take you through what's happening on SARS. So over to you, Warren.
Okay, thank you, Chair and honourable members. So this is an update on SARS's revenue performance for the first 4 months of the fiscal year. As we've noted in the 2025 budget, SARS was allocated an additional 7.5 billion rand to improve the revenue collection performance. They've indicated that in the 2025 year, they would be able to raise between 20 and 50 billion rand in additional revenue from debts owing to the fiscus. So part of the 7.5 billion rand allocation would be dedicated to additional resources to collect this amount. In the 2025 budget, the minister had indicated that with this additional investment into SARS, he expected about 35 billion rand in additional revenue to be collected from the debt owed to SARS. So we've committed in the budget to also provide progress on SARS's revenue performance in collection in relation to the cash from debt that they're collecting on a monthly basis. This information is published on the National Treasury website. We've published this data historically and then going forward from the end of June 2025. If we look at the data to date, SARS has collected about over 32 billion rand in debt from debts owed to the entity. And in the data that we also provide, we show projections from SARS in terms of collections on a monthly basis, the actual collections relative to the expectations from SARS. If we skip to the next slide, I can show you in a bit more detail what this actually looks like. Yes, yeah. If we look at the table, the first row in the table is the actual collections from debt owed to SARS. Then you can see there it shows the data from April to July this year. So in total, 32.2 billion, as I've indicated previously. And then also in the bottom 3 rows of the table, we show the differences to the expectations. Firstly, on the second row, to the baseline amount of 100 billion expectation in collections from debt for the year, and then also in relation to the additional 20 billion and 35 billion that SARS had indicated they would be able to collect over the year. So the additional 20 and 35 billion is related to the additional resources that SARS had received in terms of additional funding. And what we can see there is that in relation to the baseline projection of 100 billion rand in debt to be collected in the 2025-26 fiscal year, SARS has collected 2.4 billion more than expected in terms of the baseline. However, if we look at the expectations to collect an additional 20 billion rand, an additional 30 billion rand, they seem to be slightly behind the progress that they had expected at the beginning of the year. So in terms of collecting the additional 20 billion rand, they are 2.6 billion rand below the expectation. And in terms of the 35 billion rand extra, just over 6.3 billion rand below what they had expected to collect at this time of the year. Initial indication from SARS had indicated that some of these debt collection cases had increased in complexity from the initial expectations and require some more stringent enforcement measures to collect that amount of money. They've indicated that they've used part of the additional allocation already to source additional resources to collect this debt. Those resources were only brought online from around June this year. And the expectation is for the rest of the year that as these resources are implemented and become fully operational, the revenue collection performance should increase towards the end of the fiscal year. So at the moment, they are They are collecting more than what they had expected in terms of their baseline projections, but in terms of additional revenue, they are marginally behind their expectations up until July this year. Thanks, Ulrika.
Okay. So, Chair, the next few slides really responds to the request that you have made in relation to how do we deal with consequence management, how do we deal with capacity building that helps departments spend their money better. So, Chair, in this slide, it is just, I mean, we take our cue around what it is that the National Treasury can do versus what it is that departments are responsible for from the PFMA. And in the first publication of the PFMA, which is that Green Book, the then Minister of Finance wrote a foreword around what we're trying to achieve with the PFMA. And I think it's quite important to highlight a few of these objectives. So firstly, around the quality of information and the timely provision of that information, which is what we use when we come to report to you on. And I think the important one is around allowing public sector and program managers to manage their programs, but holding them more accountable for their management decisions. And in that context, the PFMA sets out the responsibilities of accounting officers. So in sections 38 and 39 for national departments, trading entities and constitutional institutions. And similar provisions exist for accounting authorities of public entities in terms of section 51 of the PFMA. And some of the responsibilities that are set out for accounting officers and accounting authorities really relates to how they use resources and how do we take into consideration value for money when we make policy and the policy considerations in relation to their own responsibilities. What's quite important, I think, for this committee is that when they do report on expenditure, it's done by vote and the main division of the vote. So those are the programs. And that we then take the appropriate steps in relation to overspending on a vote or a main division of the vote, which is defined in the PFMA as unauthorized expenditure. So in terms of Section 81 of the PFMA, a breach of these provisions constitute financial misconduct. And the provisions on how to deal with financial misconduct are set out in the Treasury regulations. And there's a couple of components that I think that's quite important to understand around all of this. There's unauthorized expenditure, irregular expenditure, and fruitless and wasteful expenditure, which responds to the financial misconduct in sections 13, in terms of sections 38 and 39. But then we also have this anomaly around underspending and underperformance, which isn't provided for in all of this, because underspending and underperformance is generally responded to in a way that deals with normal public service regulations around people not doing what they should be doing or not managing the risks associated with what they're doing in a satisfactory way. So the PFMA allows us to kind of deal with the overspending and when proper processes haven't been followed or when there's some wasteful expenditure. It doesn't explicitly allow us to deal with underperformance, but we do deal with this, at least in terms of our responsibilities, through various capacity support mechanisms that we have. The PFMA is quite clear on the Treasury's responsibilities around setting norms and standards, and in dealing with it in that way, we have these various fora that's open to departments, so both at a national and a provincial level, in relation to what the quarterly meetings with the CFO and providing the necessary support through those mechanisms. We have similar mechanisms for managing risk and for supply chain management, and how we usually deal with all of these are through a whole range of instruction notes and practice notes. We have a series of guidelines and circulars. From a planning point of view, we try to improve planning through the procurement plans that departments submit, and on the budget projections. So what we are showing you today really is in relation to the budget projections. Chair, I think one of the points that I failed to probably make a little bit earlier in this presentation is that we only look at underspending or overspending as defined by spending against their appropriated amount at the end of the financial year. So what we presented to you today.
Yeah, just if you hold on 1 second, I have been frantically going through the set of documents that you've sent previously, and this particular presentation has not been sent to members. or at least I can't, yeah. So may I ask if it's possible for someone from your department to email it to our committee secretary that incorporates some of the inputs you have made now? And if you wouldn't mind, just purely because certain members have not seen some of the presentation, I mean, I'm looking at the documentation you've sent us so that they can also familiarize themselves with it when we go through the next few, so that when the questions come through, they're a little bit more substantive. I think if I can ask you to do that, I just don't want us to be ceremonial. I want to make sure that we get all the information that we need. Is that yeah?
Chair, I'm going to do that immediately. Get somebody to share this. My apologies. I had assumed that this was shared with you last week when we were due to present initially last week.
There's a set of documents that came through. There are just some updates from today that I didn't see. So you can proceed in this regard, yeah?
Okay. So actually, I think this is my last slide. But the point I'm trying to make here is that when we think about, or when we consider underspending and overspending, it's against the full appropriated budget. Usually that is at the end of the year. What we look at is in relation to, at least in the first 3 quarters of the year, we talk about higher than projected and lower than projected spending. I mean, the idea, Chair, is that when we do come here with some of these things in relation to how actual spending happens in relation to projections, that's a narrowing gap that shows that we are getting better at our planning, we're getting better at spending, at projecting these things. I mean, I think there were 2 classic examples that I'd refer to, one on the Tirisano Fund, where the department is maybe projecting expenditure for knowing that these funds only come in later in the year, and actual expenditure will only happen once those funds come in. So when we adjust the budget, and the other area where you see this is in relation to conditional grants and intergovernmental transfers, where sometimes budget projections don't align with actual grant payments, and how we improve on all of those things. Chair, this is where I end, and I'm going to hand over to my colleagues in assets and liabilities to take you through their presentation while I try to get this sent to you. Thanks.
Thank you, Ulrika. Good morning, Honourable Chair. Good morning, Honourable members. My name is Ravesh Rajlal. As Ulrika has highlighted, I'm the acting head from the Asset Liability Management Division. So, Honourable Chair and honourable members, you basically tasked us to provide you with 2 presentations. The first one, obviously, that we're going to go through is the debt management strategy, which is something new. So we're going to start with this presentation. Wanga Tsibi, who is our Chief Director and who's joining us from France. She's at a debt management forum. We'll go through this slides. It's about 6 or 7 slides. So let me hand over to Wanga Tsibi. You can take us through, Wanga, from your side.
Thank you, Ravesh. Good morning, Chair and honorable members. My name is Wanga Tsibi. I look after liability management. I'm responsible for the financing of government's gross borrowing requirement. I'll take you through just a couple of slides. The 3rd slide, which is the most important slide. This first slide just gives a summary of what the gross borrowing requirement is. And so what we're saying is that what we finance consists of the budget balance, which is the difference between revenue and expenditure. This also includes payments for the Eskom debt relief arrangement. It also includes proceeds from GFECRA, which is the Gold and Foreign Exchange Contingency Reserve account, and also maturing debt. And that's what comprises of the gross borrowing requirement. Secondly, when we look at funding the gross borrowing requirement, we have a hierarchy that we look at, or considerations. First one being liquidity. And so what are these suites of instruments that we can put together that will ensure that we are able to meet the gross borrowing requirement, which is the cash target for the fiscal year? Secondly, we look at refinancing risk, in that we should be able to retire maturing debt without necessarily having an issue of being able to redeem those maturities that are coming due. Third, we look at the cost of borrowing, which is quite important to us in that we look at what are these instruments that would also ensure that we reflect a lower cost of borrowing. Next slide, please. On this slide, also at the same time, it's quite important to say we have a suite of strategic risk benchmarks that guides how and when we issue. So this ensures that we are able to prudently manage our debt stock, our short-term, our long-term, our foreign issuance, to ensure that we are able to redeem and adhere to those primary considerations, which are liquidity, refinancing, and the cost of borrowing. At the same time, what is quite important is because we've got two programs. We've got a domestic program. We also have a FX, which is the foreign currency program. In considering which instruments we think would be able to give us the liquidity, looking at refinancing and cost, we have to ensure that we issue these instruments into demand, meaning that we would have to assess the demand from the various categories of investors that actually hold our government bonds. And these are the banks, which are monetary institutions. We've got pension funds, we've got foreign investors, insurers, and other financial institutions. Financial institutions is actually the participating mortgage schemes, unit trust, financial public enterprises. What is also important to illustrate here is that we do engage with the market on a continuous basis just to understand where the demand is. Lastly, we've got an FX borrowing program. Our FX program is mainly focused on us borrowing to meet our FX commitments. These commitments are interest, redemptions, our FX payments by departments. Essentially what this means is that we borrow in foreign currency in order to meet our foreign currency commitments. Ravesh, if you can go to the next slide, please. The next slide. I've already covered that. Next slide, please. So this slide is actually the most important slide. What I will say, which is quite important, is that this slide is actually our financing program for the year and over the medium term up until 27-28. This is publicly available information that we publish at budget and also at MTBPS. At budget, it sits under chapter 7 and MTBPS, I think chapter 3 or chapter 4. This information is available there. I would like to draw your attention to column that has 25-26, which reflects our current year's financing arrangement. So the first line shows the main budget balance, which is 361 billion. And then you've got redemptions of 171 billion. These redemption is maturing debt. It's debt that is going to mature in 25-26, which is for domestic debt. It's 111 billion. So these are bonds that are coming due in this fiscal year. Then you've got the foreign loans as well, which is 60 billion, which is coming due in this fiscal year, as well as the Eskom debt relief arrangement, where there's an 80 billion that has been penciled in for this fiscal year. And then lastly, this is the GFECRA settlement, which is the agreement between us and the Reserve Bank that they will disburse 25 billion to government in this fiscal year. And the total gross borrowing requirement for the year is 588 billion. That is the amount that we need to finance in this fiscal year. How we plan to finance that is, I'll take you down. If you look at domestic short-term loans, these are treasury bills. We plan to issue around 37 billion of Treasury bills to finance that 588. We also plan to issue around 345 billion of domestic long-term loans to finance that 588. We also have foreign loans of equivalent in dollars is $5.3 billion to finance that 588. And we will also use our cash balances to ensure that we are able to meet that 588 billion. So this column here speaks to what our strategy is for this fiscal year in terms of how we are going to raise that 588. What is actually quite important in this slide is to actually say that South Africa's got such a deep and liquid domestic market in that we mostly rely on our local investors to raise funding to meet government's gross borrowing requirement. The domestic borrowing finances around 83% of the gross borrowing requirement. And this is really specific to 25-26. What you will also see is that in this current year, we are reflecting 588. However, in 26-27, the gross borrowing requirement, which is what we need to fund, will come down to 434 billion. However, it will increase to 587 in 27-28. And this is really as a result of maturing debt of 301 billion. So if you look at the redemptions line in 27-28, you'll see that we've got bonds that are maturing in 27-28 that are increasing how much we would need to fund in that particular year. I take you down to the foreign loans. You will see that for this current year, it's 98 billion, which is $5.3 billion. And then the next year, it's 5.379, which is about 5 billion. And you will see to about 95. So overall, for the next 3 years, we need to raise $14.6 billion. Next slide, please. This slide looks at who are the holders, who are these different sectors that are holding government bonds. Like I said initially, to say South Africa is very lucky, unlike other African countries. And if you look at who our peers are, our peers actually sit outside of Africa because we've got such a deep and liquid domestic market. And the reason that this actually protects South Africa against FX risks, because we are able to raise most of the funding locally. You will see that our domestic investors are currently holding 75.4%. So if I go to 2024, you'll see our foreign investors are actually holding 24.6%. And then you've got the pension funds holding 22.6%. Monetary institutions, which are the banks, holding about 20.8%. And then you've got the other financial sector holding 23.3%. And insurers hold about 7.5%. And then you've got others, which are small other institutions that are holding the balance. And if you look at, the non-residents has actually come down relatively from the previous years, from the highs of 41 to about 24%. And what's important here is to say that at times where foreign investors actually sell off, you actually do get local investors that come in and take that extra stock, really just reflecting the deep and liquid market that we have in South Africa. Next slide, please. This slide speaks about the composition of foreign debt. Foreign debt only accounts for 17% of the gross borrowing requirement. The other percentage is raised through the domestic market. Our foreign debt consists of marketable, which is where we access the international capital markets, and also non-marketable, which are the concessional financing. Concessional financing are these policy-based loans that we have been raising most recently since COVID. with the likes of the AFDB, the BRICS Bank, the World Bank, the AFD, and the KfW, the German bank institutions. These are loans that are below market rates. And so these are loans that are actually cheaper than we would get in the international capital markets. They actually are loans that come with grace periods where you defer the capital repayments to, it could be 2 years, 3 years, 5 years. And so these are institutions that are AAA rated, that go and raise funding with their AAA rating at cheaper rates, and then they on-lend to us. These are institutions that support current reforms or policies that we want to institute in the energy space, in the transport space, in the water and sanitation space as well. You will see that, I mean, if you look at the cost of raising or interest, it's one of the highest expenditure items. And so since 2020, we've been exploring ways in which we can raise funding at much cheaper rates. And the red bars here reflect the concessional financing, which is lower interest rates that we've been getting on these loans for the past couple of years. And in terms of, if I have to quantify it, with these loans, we save the sovereign around 3 to 4% compared to if we were to raise these funds in the international capital markets. Next slide, please. This slide reflects the strategic risk guidelines. So this is just a reflection. If you remember on the first slide, I spoke about that we have internal risk guidelines that guide us in terms of how, where, and how to issue in our short and long term. And so this is a reflection of those strategic guidelines. And this graph here is a reflection that we are still within those risk guidelines that we have put in place. If you look at Treasury bills, risk benchmark is about 15%. And we are currently showing about 9.8%, reflecting that we are still within that 15%. Foreign debt is averaging around 10%, of which the benchmark is around 15%, and so the other instruments. And so we've got these risk benchmarks that really just guide us in terms of how much we can issue, looking at exposure to interest rate risk, looking at exposure to refinancing risk or rollover risk as well. Next slide. I think this is the last slide, if I'm not mistaken. Thank you very much, Chair and honorable members.
Perfect. Thank you, Wanga. So honorable Chair and honorable members, I will now, and along with Ms. Rodzani Mandiwane, who is the Acting Chief Director for Governance and Financial Analysis, will take you through our presentation, which is the usual presentation that we do on the SOCs. So let me just put that up for you. Okay, let me just hand over to Rodzani. You can take us to Land Bank, and then I'll do the next 5 state-owned companies. So Rodzani, over to you.
Good morning, honorable members. Good morning, Chairperson, and good morning, colleagues. My name is Rodzani Mandiwane. As Ravesh has already said, I'll be taking you through Land Bank presentation. So as we are aware that Land Bank had experienced liquidity challenges since 2020 as a result of downgrade from investment grade by Moody's in January. That resulted in the debt of approximately 45 billion, of which 5.2 billion was guaranteed to be in default. So then Land Bank entered into an engagement with lenders, with various lenders groups to find solution through a process they called a liability solution. Next slide, please. To assist Land Bank, then government provided a Land Bank with 10 billion. The purpose of 10 billion was to for the Land Bank to continue to pay interest on all outstanding debt, pay down capital on its debt portfolio, undertake a disbursement to clients, to cure default position, to pay off the guaranteed lenders, as well as re-establishing the development of and transformation mandate. Then in September 2024, which is last year, the Land Bank reached an agreement with its lenders, and then the default was cured. At this point in time, the focus by the Land Bank now has been shifted towards improving the performance of the bank and also ensuring the long-term sustainability and to improve development effectiveness, especially through blended finance scheme. Next slide, please. So as the part of supporting the sector through a blended finance scheme, currently the Land Bank has built a credible pipeline of potential grants and loans disbursement to the value of 1.945 billion. And the Land Bank is actually currently doing well in terms of ensuring that the approved clients are provided with pre and post finance support. Next slide, please. When we come to the financial performance as at 30 June 2025, in terms of the net interest income, there is an increase to an amount of 244 million, which is an increase of 75 million. This is as a result of the improved reduction in the interest expenses following capital repayments in prior years, as well as the interest rates cuts. When we come to operating expenses, it has declined by 3% to 145.1 million as a result of a reduction in restructuring costs as well as legal and professional fees. So, however, the Land Bank has recorded at this point in time a loss of 21 million compared to the profit of 22 million in prior years. The loss is primarily driven by impairments. Next slide, please. When we go to the net loan book, it grew marginally by 11.59 billion. It grew from 11.59 billion to 11.63 billion, while disbursement and interest accrual added 188 million. And these gains were actually offset by higher expected credit loss provision of 147 million. NPL ratio, it has rose up to 53.6%. And it remains high. However, there are active management strategies that are happening, including the bi-weekly executive oversight meetings and client-level intervention, which is ongoing. And we hope to see the outcome in a later stage. Next, please. So since 2020, there has been a reduction in Land Bank's funding liability from 40.6 billion to 9.443 billion as of June 2025. And this represents 76.8% decrease in the funding liabilities. Maybe one thing that I can also mention to the members is that ensuring stability on the Land Bank, the board has also been appointed in the previous week. So we hope to see more improved governance strategies that are going to be happening and assist the bank to be finally stabilized. I think this is the last slide.
Perfect. Thanks, Rodzani. So, Honourable Chair and Honourable members, I'm going to take you through the next 5 state-owned companies. So there's a lot of detail in the slides. So what I'm going to do is basically just lift out some of the salient points for yourselves, Honourable Chair and Honourable members. I think as the request was just to focus on Q1 and also what are some of the interventions that Treasury is assisting with these entities. I think just on Eskom, it's important to highlight that their Q1 performance has been much better than the previous quarter of the previous financial year. They've reflected an actual tax after profit of 6.67 billion. Revenue has grown as well, and obviously they're one of the key issues that we are monitoring together with our intergovernmental relations team is around the Munich debt matter, which is now grown to 102 billion as at the end of the first quarter, that was in June. I think just moving on to the next slide, which basically here again, just to highlight the last bullet point, was around debt and securities, which has now reduced to 371 billion. compared to the 428 billion as at March. And obviously, a large part of that was in relation to the borrowings that have been settled by Eskom, and also as part of the debt relief program as well. I'm not going to go too much in terms of the next slide. I think operational performance. I think there's a lot of detail there, which I won't go through in at the moment. I think it's for reading. I think what I want to reflect on is on the Eskom Debt Relief Act, which is on slide, there we go, slide 15, which I think is important just to highlight to the Honourable Chair and Honourable Members around the support package, which was initially 254 billion. And as you will know, 78 billion has been allocated in 23-24, 66 in 24-25, and 40 in 25-26. So that was the initial, plan. And as we said, the advances were strictly earmarked for capital and interest payments. And we also initially provided for a 70 billion debt takeover. To date, we've converted 140 billion into equity, as has been highlighted in the slide. I think then what has happened subsequent to that, and has been outlined in the budget as well, is that we've then basically reviewed the debt relief pillars and the Eskom debt relief package, and instead of the 70 billion debt takeover, it will now be advanced. It will now be replaced by two advances totaling 50 billion, 40 billion in 25-26 and 10 in 28-29. So they will also be structured as we've done with the previous advances as interest-bearing loans converted into equity. I think subsequent to this presentation, we've mentioned that government is amending the Act. It has been assented to, so we've got the Eskom Debt Relief Amendment Act, which was assented to at the end of August. And now the amended package looks at a revised package from 254 to 230 billion, which represents savings of 24 billion. And the final tranches, as we've highlighted, is that they will comprise of 80 billion to be dispersed towards the end of 25-26. That's the last quarter of 25-26. And then the 10 billion will be transferred into 28-29. Honourable Chair and Honourable Members, so we've presented this slide before in terms of just around the interest payments and in terms of mini debt, which I've mentioned before in the previous slide. I think just moving on to the next slide as well, we've also presented this, but it's also important to lift out the fact that we still continue to monitor the conditions. There's nine strategic conditions which Eskom has to meet. I won't go through all those conditions. It's in the pack. Basically, these conditions have to be met, in order for the conversion of the loan into equity. So we meet at a quarterly basis. So these conditions have been met, and that's why you would have seen in the previous slide, which I've lifted out, is that we've converted the 140 billion loan into equity. So I think that's important to flag that Eskom does continue to meet the strategic conditions. I'm just going to now skip over to SAA. Some of the background has been shared as well before, but I just want to flag here that with the strategic equity partnership not materializing, obviously, there was a funding gap, of around about 3 billion. So what has helped SAA to close that is the disposal of its payoff landing slots at London Heathrow, and that generated 1 billion in cash. I think moving on to the next slide. Here, what we also want to flag, and this is something that we're working together with DIRCO, Department of Transport, is we've seen cash that's still not being repatriated from Zimbabwe. There's 1 billion rand. So once we progress with that, that will also go a long way in helping SAA to improve its cash flow and also expand its operations and also aircraft as well in terms of the various routes that it wants to undertake. So I think that's something that Treasury and DIRCO are working on in terms of how do we unlock those challenges in Zimbabwe with the 1 billion. Then moving on to the next few slides, I think I just want to focus on the financial performance. So basically here, I think it's important to highlight that they've generated a profit of 39 million against a loss of 381 million. It was largely driven by contributions from SAA and Airchefs itself. So I think that's important to flag that they're on the road to recovery in terms of financial sustainability. Then we move on to the next slide, which I don't want to get into this too much of detail here. I think those are just supporting slides, basically just unpacking some of the operational costs which they've actually achieved in terms of from their side, from fuel, aircraft maintenance and lease costs, and also other operating expenses. I think moving on to, let's go on to the next slide. This again just basically gives you a overview of the earnings before interest, tax, and amortization as well. So I think that's we can leave that for the honourable members and the chair to read. I think moving swiftly across to Transnet, I think here it's important just to flag around the fact that Transnet have just released their year-end results, and obviously the key point to flag here is that while they've reduced their losses, I think the key challenges remains around tonnage, what they can actually deliver against what they've budgeted for. The chair and the CEO have put out or have earmarked a target of 250 million tons, I think, in the next few years. But as you can see, by March, they've only achieved 160 million tons, which is well below its 170 million tons. I won't go into the freight logistics roadmap. I think we've talked about that, and it's also some of the work that the Operation Vulindlela team are also undertaking. That's also on the slide as well. I think what I would want to just go into here is the next slide, which talks about the government guarantee support package, honourable chair and honourable members, which you would have seen now has increased to 196 billion, which is to support the corporate plan over the 5-year period. And this was after we've engaged rating agencies as well, around their concerns, just to mitigate default risks, which arose from the rating downgrades. The government framework agreement, or the guarantee framework agreement, was concluded back in 2023, and in that we had 32 conditions, of which Transnet has met 25. 5 obviously are in progress and 3 are delayed. I think what's important to highlight to the honourable chair and honourable members is that we are busy strengthening and finalising the revised guarantee framework agreement. So in the next iteration of this presentation to this honourable committee, we will then provide the updated guarantee framework agreement conditions and report on compliance to those set of conditions. I think moving on to the next slide here, just basically an overview of the financial performance. Here, there's still some work to be done from a sustainability point of view. I think even though it's improved, I think the volumes have slightly improved, compared to what we've seen in the previous year. But I think the volumes still need to be ratcheted up and hit the budget, as has been highlighted in terms of rail volumes only reached 46 million, which is below budget of 51.4 as an example. So there's a bit of work to be done, and that's obviously work that's carrying on in the background with the National Logistics Crisis Committee and Operation Vulindlela as well. So I think I just want to then move swiftly around to here, just to the revenue as well. As I've mentioned, revenue is still below budget. slightly below budget. But however, we've seen, the EBITDA was 7.2 billion, exceeding the budget slightly, which is obviously as a result from your 10% savings in your operational costs. Again, here that's some work, that's some good progress that Transit is making on in terms of personnel costs, energy costs, and maintenance expenditure. But we need to see that being sustainable throughout the financial year. Then moving along to operational performance, I don't want to go into that detail. That gives you just basically some of the background in terms of some of the what was behind the loss. And obviously I think a key focus for us is executing on its capital expenditure plan, because a large part of the guarantees that have been provided, in fact most of it, is towards ensuring that Transit achieves its capital expenditure plan. Then if we move over to the post office, here also there's a lot of detail in these slides, Honourable Chair and Honourable Members. I think we all aware of the business rescue process. I don't want to go into this detail here. It's background, which we've shared before as well. I think what's important here to flag is that that the BRP itself, over to the next slide, sorry, I'm on the wrong slide, slide 41, which basically just in terms of the progress from the business rescue practitioners here. They've initiated the restructuring process. They've made some key appointments. They've revised the structure as well. For example, they filled some of the regional general managers, area managers, customer call centers as well. They've also secured a partner in unlocking some of the value from his property portfolio. So there's been some progress made there, which is good to note and to update to the Honourable Committee. I think this is also some of the background as well. They still require an additional 3.8 billion. And obviously that will be discussed with the post office as we go through the budgeting process. I think what's also important to highlight here is a total of 656 retail branches have been retained as its point of presence, and as at the end of Q3, the previous financial year, they had around about 6,000 permanent and non-permanent staff, reflecting a reduction of 176 employees. So that's just an update in terms of the staff complement. Then if we move on to the financial position for the post office, here basically the revenue, we're just reflecting the revenue, which amounted to 320 million, which is below budget, significantly below budget. So I think there's a lot of work that the post office has to undertake in terms of its revenue generating initiatives. But again, it's largely due to a lack of funding. Operational expenditure did reflect a savings of 26%, down from 100. It was budgeted for 602, of which it achieved 210 million. So I think that was largely driven to the fact that there's been a branch optimizations, and also, as I mentioned in the previous slide, reduction in the headcount as well. Here this goes into the details again around the financial position, which I won't go to now in that detail. I think just moving on to the next slide. Here I think it's important just to highlight as well around some of the progress that's been made around engaging the Department of Labour around the TERS support for to resolve some of the cash flow pressures, around the staff costs. So that's work in progress. The BRPs have also satisfied the condition of substantial implementation. So their intention is obviously at some point to file for exit, and obviously then hand over to the shareholder. So we understand from the DCDT, the shareholder department, that they're busy with the CAN memo in this regard. And obviously they are at the same point requesting funding to be made available for the final creditors' dividend, which is around about 509 million, which is equivalent to 18 cents to the rand. And obviously, if this is not provided, then there's a possibility of liquidation, but obviously there are discussions that we're having with the post office and the business rescue practitioners. Then if we move on to the conditions here, I don't want to go to the conditions in detail, but just to reflect that there were 6 conditions around the initial 2.4 billion allocation, and these conditions all have been met. And then I just want to swivel to the last basically entity, which is Denel. Honorable Chair, honorable members. Here again, there's still challenges with Denel's liquidity, solvency challenges. It is in the process of implementing its turnaround plan, but I think some of the challenges is largely around some of its right sizing of operations, payment of legacy obligations, and also executing on its order pipeline. Just in terms of, I want to move to the next slide, which is around the Denel, the government guarantee that's recently been concurred to by the Minister of Finance. So this is a significant improvement in terms of executing on its order pipeline. So the Minister of Finance has concurred to a 660 million guarantee in support of the Oman G6 contract. So there's been conditions attached, and I think the next phase now is for Denel to secure some of its bank guarantees to support this contract. I think for financial performance here, revenue reported at 286 million, just slightly below the budget. Again, here on operating costs, it's overspent, so there's some work to be done in terms of that aspect around operating costs. So we just need to work on that around some of the, I think, the contributing factors, as highlighted there, is around the landward division, largely because of unrecoverable indirect labor and some of the demonstrations that they've had in Saudi Arabia and the ongoing related costs for the Hoofeester and AV8 projects. And I think that is all from my side, Honourable Chair and Honourable Members. I tried to make up some time there, and let me just pause and hand over to Najwa Ali Idris, who I think is going to take us through the last presentation. Thank you.
Good morning, Chair. Good morning.
Just hold on, ma'am. My apologies. What I wanted to ask you was, if it's possible, can we pause at this point? Whilst I appreciate there's a presentation on the Jobs Fund, what I don't want to do is then proceed with 5 other presentations, given that also members have also not received the previous presentation, which I must say, what we are going to have to do is, as part of the communication that we'll put forward, I will request that we somewhat get a special meeting with the Minister of Finance and some of the detail that was shared in some of the presentation that was shared today. Because it makes it hard work when I've been following up as to why the presentation from today wasn't sent. We didn't receive it. So all the information that was received, we circulated. So what I will then certainly do is hold up on some of that, put it on a special meeting that we will have, where the Minister of Finance must come and present on some of those. I want now to pause, because otherwise we will end up, the presentations that were received on debt management and some of the state-owned enterprises, those were received, and I'd like to engage on those now. And then once we are done with that, I will then go on to the presentation, the Jobs Fund, because otherwise we can end up missing the first 2 presentations from Treasury, and then only then talking a little bit more about the Jobs Fund. So let me pause you, if it's possible, for 1 second, and then let me allow members to interact on the first 2 that are there, noting that on the first one, the presentation that was already, I think you put today, I'm going to put a special session so that we also engage the Minister of Finance on some of the issues that are in it. I recognize Honourable Bateman, and I'm wanting to check if there are any other members that have got respective questions on the first recognize Honorable Kalega Mazibuko, Waitlin.
Forgive me, Chair. I have a problem, but please note.
Honorable Kamede, I'm going to ask that the parliamentary services get you a device so that you can be effective at raising your hand.
I've been using the same device. I don't know what happens these days. Maybe I should pass by next week, Monday.
Yes, I would recommend that we work with that. And then I see Mkhonto and Honorable Skete. Let me, in that order, begin with Honorable Bateman.
Thank you very much, Honourable Chair, and good morning to my colleagues and to the team from National Treasury and all the parliamentary staff who are here on the call. I'm going to start with Danelle. The first question I have is, how is it possible that Danelle overspent its operating costs by 30%, 237 million versus 183 million? Who was responsible for this? On the slide, it talks about Danelle's landward division. It makes mention of unrecoverable indirect labor and other factors. What is this unrecoverable indirect labor? And could you please provide us with a detailed report on what happened here? I think that we could answer that partly now in committee, but I think there might also need to be a written reply to that question, please. The Minister of Finance, it says, concurred also on Danelle with the issuance of the 660 million rand government guarantee. My question is, on what authority did he agree to this? And from what budget will that be funded? Do we need to change the law so that Parliament approves all guarantees in the same way that it is required to approve any other unbudgeted expenditure? In other words, there's no point in us having rules about what expenses can be permitted and what approval processes are required for expenditure if we don't have exactly the same rules applied in relation to guarantees. So I'd like the Treasury just to speak to that, that question, please. Then on Eskom, I think it's a well-known fact that the high cost of energy is holding back economic growth in South Africa, and also that Eskom's pricing is making it uncompetitive, so it's losing good customers. Further price increases are not sustainable or justifiable. And just recently, we had more prices coming back, price increases coming back as a result of Eskom errors. I do really think we need to put pressure on Eskom from the National Treasury side to look more closely at its cost base. I remember anecdotally speaking with someone working in the recruitment industry who said she just couldn't find any alternative employment for Eskom employees because they were paid at such a premium relative to the marketplace. That's just an anecdote, but I think I've heard this discussed and said in many forums, and there have been media reports about it. I think given that the fiscus has put so much money into Eskom, and now NERSA has been approving above inflation price increases, that's put a lot of pain on all South Africans. Amongst National Treasury's list of conditions for any kind of support for Eskom or any kind of future approvals from NERSA for increases must be an investigation, a full investigation into Eskom's remuneration levels. And what I would like to see is the remuneration levels of the 300 highest paid employees at Eskom. I would like those to be disclosed, not necessarily the name of the person, but the job description and details about what they're paid, what the components are of their remuneration, and also comparative benchmarking data from the marketplace so that we can flush this out into the public space if it is the case that Eskom employees are overpaid. And I think that in terms of the conditions that National Treasury puts on Eskom, we must put some kind of review of remuneration levels on Eskom employees. If you have a business that is running at a loss in any other industry, you can't just push up your prices to unmarket related levels. You have to look at tightening your own belt and looking to see where you can save money. And Eskom executives and management seem to be exempt from this. They should be bearing the pain and not putting all of this pain onto the South African people. So when it comes to the influence of National Treasury, you have significant power because you have put in place the conditions around these Eskom Relief Acts. And the conditions and the pressure from Eskom needs to be felt in terms of their cost base. It can't be just the conditions relating to you must use this money for debt relief, etc. The conditions are actually too lax. I'm going to speak about I'd like to respond on that and to request a response from National Treasury in terms of the accountability with which Eskom is held for uncompetitive pricing. Then on Transnet, it would be very helpful to have cash flow projections and an understanding of what future contributions are expected from the fiscus. Are there going to be bailouts needed? I can see their results are better, but not great. We need to get a feeling of where this is heading so that we can prepare. And also, what is the status with regards to private sector concessioning with Transnet, both rail and also ports? We know we have some of the most poorly performing ports in the world. What kind of accountability is being brought about for improving that? That has a massive knock-on effect on the performance of our economy. Our whole economy has been affected significantly by our ports' performance. On SAA, we were told that SAA made a profit, but then the next thing this is the previous year, the next thing we were told, no, there was a big accounting error. It was actually a loss. Now we're seeing, again, there's a profit, but however, if you strip out the reversal of the previous year's write-down, there's actually a significant operating loss. So there's a EBITDA loss of 199 million. I don't think that's anything to be writing home about. In fact, that's 200 million rand that could be spent in a lot better way than subsidizing an airline. I visit some of the schools in Cape Town and I see how shockingly they are resourced. And that is money, we could be funneling that money towards our provinces for improving the needs on the front lines, local governments and provinces and so on. We shouldn't be pouring money into SAA. So I think I didn't appreciate this presentation on SAA because I didn't feel like it was really confronting the facts about what's happening at SAA and the losses that SAA have incurred now for the last 2 years. If you adjust for the previous year's accounting errors and also this year's, if you look at it in EBITDA perspective. Unless I'm mistaken, correct me if I'm wrong, I'm happy to be corrected. But what I want to know is what is being done to sort this out? What are the cash flow projections for SAA? And what are the contributions that are expected from the fiscus? We need to have forward-looking information and projections to be able to perform our functions properly on this committee. Thanks very much. On the next question is to do with accountability. You mentioned Section 38 of the PFMA and the financial definition of financial misconduct. That was helpful. That the accounting officer must deal with it if it's by an employee, and that the relevant treasury must deal with it if the problem is with the accounting officer. My question is, how do we gain assurance that these processes are functioning as they should with full consequences? So, for example, we were told that defense is consistently overspending. Well, what consequences have been applied for defense, and what are being applied, and why is it happening year after year after year? And what about the municipalities that have unauthorized, irregular, fruitless and wasteful expenditure year after year? It seems to me that our processes are not working. So why are they not working? Do we need to fix the laws? Do we need to fix the application of the law? That's my question around that misconduct on PFMA and the application of that law. And then lastly, on debt management, my question here is how can we reduce our long-term cost of capital, both for the government, but this will affect all of South Africa. So it'll affect our government cost of debt. It'll also help businesses and South African citizens in general to have lower debt costs. And how much realistically could we actually reduce our debt costs by? One of the things that have been discussed is reducing the inflation target, so that if that was perhaps say 0 to 3%, is your view that that would have the effect of reducing the long-term cost of capital? And then also on the direct charges to the National Revenue Fund, we saw a figure for relating to debt servicing costs that was only about 10% of the year-to-date's budget. but we're actually 25% of the way through the year. So if someone could just explain why there's that discrepancy between what's actually been charged to the NRF for the first 3 months versus the length, the 25% of the year being completed. Thanks very much.
Thank you, Honorable Bateman. May I now recognize Honorable Talega Mazibuko?
Thank you very much, Chairperson. Chair, let me first start by calling the late submission of reports. I have reports that are sneaked through today on the day of the meeting. As public representatives, we prepare, we research after we have read the reports that are provided to us. We appreciate the reports that were provided on time, and we've gone through thoroughly the reports. So we cannot allow a situation where now there are other reports that are sneaked through in a meeting. It is actually undermining our work as the representatives in this committee. Chair, let me start with Land Bank. Noting and appreciating that the bank has reduced its funding liabilities from 40.6 billion in 2020 and 9.43 in 2025, representing a 76.8% decrease. The Land Bank Chair has been requesting support through further capitalization to enable the bank to grow and to reduce its liquidity risks. What is the requested funding by the Land Bank? My question. And is the National Treasury considering allocating funds for the Land Bank? And my second question on Land Bank, Chair, recognizing the positive improvements of the bank as articulated by the presenters, how is the department supporting the bank to improve its credit ratings as they have an impact on the interest costs of the bank? And how is the bank mitigating the risk of a bad debt book without stifling access to finance for farmers, especially the emerging farmers, as we know that at the end of the day, they are the ones who suffer the most in terms of support and compliance. On Eskom, Chair, Eskom has achieved an actual profit after tax of 6.67 billion and an increase in revenue collection of above 7.7 billion due to the 12.74 tariff increase, which has contributed to the high cost of living. What are the prospects of Eskom taking a trajectory of lowering the cost of electricity through enhancing efficiencies in its operations and enhancing its revenue collection capacity? Again, an aspect impacting Eskom revenue is the, as we know, and we've been talking about it ever since the start of or the beginning of this administration, and the lack of adherence to the user pay principle in various communities, particularly working class areas. Is the National Treasury of the assessment that communities are adequately taking advantage of the indigent program? And what progress has Eskom experienced in the resolution of municipal debt working together with COGTA and the leadership within the municipalities? Because we cannot leave that hanging. Each and every report we are receiving, Chair, is articulating to this issue. And in our visit that we have made to Eskom, this came out very strongly, but it has to have a solution and be resolved at the end of the day. Eskom Chair, the fact that households and firms are developing off-grid capacity will directly impact Eskom's new generation capacity and that of the municipalities. What is the assessment of the National Treasury in relation to the increased risk of loss of revenue on the capacity of Eskom to provide affordable and reliable electricity? Is the National Treasury considering allowing Eskom to be involved in brownfield projects, particularly in the renewable sector, as a key aspect of increasing green energy produced by the entity, as this, Chair, will be a key factor of Eskom's long-term sustainability. Lastly, on Eskom, the presentation, Chair, makes reference to the Minister of Public Enterprises in slide 21, and the ministry was disestablished. How is the National Treasury interfacing with the overall governance of SOEs in the absence of this department and the shareholding company as envisaged by the National State Enterprise Bill? Chair, let me go to debt management strategy. On debt management, Chair, the share of pension fund of domestic government bonds has relatively declined from a high 30.6% in 2025 to 22.6%. Why have private pension fund institutional investors reduced their allocation as the PIC has a high allocation, and is there room, Chair, for private pension fund to increase their allocation? Noting that our government's debt portfolio is in line with the strategic risk benchmark, what are the causal factors increasing the country's risk premium of the country and is distorting our cost of capital? And what measures is the National Treasury taking, Chair, to mitigate against the high credit premium? What are the major alternative revenue proposals being considered by the National Treasury to increase revenue and avoid a reduction to non-interest expenditure, and to enable a significant increase in non-interest expenditure to enhance the social wage and to invest in high multiplier economic investment areas? Other question, Chair, on debt management. Is the National Treasury enhancing its coordination of monetary policy and fiscal policy debt stabilization, as monetary policy instruments can support debt stabilization? What are the current critical refinancing risks relating to the high premium payments that will be required in the medium term? And to what extent has the department restructured its debt through refinancing? So, Chair, what is the bond value? And last, maybe one before last, noting that the majority of our government bondholders are domestic, can't we restructure our financial architecture to lower risk premiums demands as they are influenced by external factors? And Chair, what are the major G20 finance track working group resolutions to support debt stabilization measures of our country and on the continent? And lastly, Chair, based on the presentation on the SOEs, we recommend the two following recommendations. One, the National Treasury should develop a recapitalization strategy focuses on supporting the growth opportunities of all SOEs to enable them to project jobs, support value chain industries, and restore their liquidity and balance sheet for a sustainable self-financing capacity. And the last one on SOEs, we recommend that all SOEs must be recapitalized, recognizing their compliance and growth potential, which requires capital. So that is our recommendation to this meeting, to National Treasury Chair. Thank you very much.
Honorable Kalaka,
there were a lot of presentations and it's difficult.
Yes, Honorable Kalaka Mazibuko, those particular recommendations, if I can ask you to put them in text so that they can be sent to the Secretariat so that we can capture them, A, correctly and for minute-taking purposes, but B, be able to understand them as a committee in broader sense, so that whatever the recommendation is, it can be, if it is acceptable, we can then put that as part of our report so that we can act from there. So if I can request that you do that, that would be helpful. Is that okay with you, Honorable Kalaka?
Certainly, Chair. It is okay. Thank you.
Honorable Wakelin, you are recognized.
Thank you, Chair. Let me start off, before I get stuck into my questions, possibly just mention to the National Treasury officials on this committee meeting that based on our strategic program for the year plan, that they can expect that we will have very much more very focused questions that National Treasury would need us to answer. They need to answer us on. So apart from the submissions they're going to do on a quarterly basis, it's important maybe to notify them in advance. There's a large expectation of very specific feedback that we're going to require as a committee. Now, based on that question brings me to, and that dovetails with the submission when reports come to us, Chair, and I don't want to repeat what you have said and previous speakers, but time is not on our side, and because time is not on our side, we are unable to keep on going backwards and forwards on mislaid reports or submissions that were not done. So we don't have the time on our side, and it's important that National Treasury are aware of that. Chair, and as far as just a few matters I would like to speak on, the first one relates to, if you allow me, on the debt management that I would like to quickly speak on, if you allow me. Okay, here it is. So currently, the one thing that they have highlighted is that there's a gap in the current oversight practices, in particular Parliament. And my question to them is very simple. What are they suggesting to us as a parliamentary committee? How can we assist them to ensure that National Treasury, considering the enhancement of transparency of public debt management and the role that Parliament plays in the oversight role, and how can we do it more effectively? If we can just get clarity, I'd like to see the nuts and bolts as opposed to just purely put out the statement that parliamentary oversight, there's a gaps, but not come up with solutions. So it brings me back to the original question is, so what? As long as we can have some indication of what is expected and how we can assist as a committee to implement those additional oversight mechanisms. Then, just a very broad question to National Treasury: how they plan, given the increase to 6.09 trillion, how do they plan to balance the need for borrowing with the imperative to maintain fiscal discipline? Because those are the two areas that keeps on pushing and pulling each other. If we can just get a sense of what clear plan do they have, as opposed to just giving us a broad strokes, very specifically plan how they're going to balance between fiscal discipline and the borrowing. Then, as far as the debt management is the third question, and that relates to multilateral loans. What are they going to do to safeguard, and what evaluation process do the National Treasury want to put in place to assess the long-term implication of these loans on fiscal sustainability and economic growth? And I'm talking particularly around multilateral loans going into the future. The Chair, I will park my question. I've already got questions on the original first presentation, but I will park that until the time you bringing that special committee meeting forward. Chair, just on the SOEs, if I might quickly, on Land Bank, the non-performing loan ratio of the Land Bank is extremely high. What is National Treasury going to do or to assist the Land Bank to ensure that the bank's operational capabilities will not be affected by these non-performance loans, and how do we deal with these non-performance loans, and particularly from a National Treasury point of view? Then, we spoke a lot about Eskom, but there's a very specific matter on Eskom and municipalities that I would like to understand. Chair, I know that Eskom has rolled out which we call the Municipal Debt Relief Support Program. We still have not seen a full impact of that program. If National Treasury can assist us and tell us the impact that has and where we are, and particularly the numbers. So how many have, where are we now with regards to applications for these debt relief support programs, the impact of those, and the effectiveness of this specific program it had on repayment from municipalities. Coincide with that, Chair, is a technical matter that I raised before, and in particular with Joburg, there was a matter, and it seems to me that thing has now seen itself in a number of municipalities, that there are disputes between municipalities and Eskom on the measurement modulation that is used to measure electricity usage and invoicing thereof. And these disputes results in non-payment by municipalities. Is National Treasury aware of that? If so, what are they doing about that to assist, to ensure that we are on the same page when people have to pay or municipalities have to pay their debts? On SAA, we keep on referring back to the matter of the repatriating funds from Zimbabwe. And my question is very simple. We don't have a clear plan. We don't see where we are. Where are we stuck? What is the nuts and bolts of where are we stuck? What are we going to do to fix it? Is there anything we can do from a parliamentary oversight committee to assist and drive that matter to a point of finality? The sense I get is that there is no money to be paid. And if so, what do we do as a country and engaging Zimbabwe in finalizing this matter? Then on Transnet, I'd like to see the specific conditions that are tied into the 192 billion government guarantees that Transnet has got received. And I'm sure that they are tracked well. If we can get just a sense of what those specific conditions are tied to that, if I might ask. And then lastly, on the matter of the NEL, and I'm covered by my colleague with regards to the 30% increase in operational expenditure. Thank you, Chair. I'll leave it at that.
Thank you, Honorable Waitlin. Let me now, Honorable, I think it's Sigete. I know you had a struggle raising your hand earlier. Is it Sigete or Mwali? Because I'd recognize you before I recognize Honorable Konto. Let me just double
It was
check.
me, Chair. It was Kamete.
Yes. Oh, Honorable Kamete. Let me recognize you now and then you can proceed.
No, thank you very much, Chairperson. I think you can see me.
Yes, you can keep your video on and proceed.
No, thank you very much, Chairperson. No, let me first start with the first quarter, and I'm glad, Chairperson, because we have attended to the issue of the presentation we did not receive. It's not good at all, but I'm not going to say much because we have already covered us. On positive trends and operational improvements, there are encouraging signs of operational progress. Don't mind my voice, I've got flu. Particularly Eskom improved energy utilization factor that 80.42% versus 75% expected, and SA's return to profitability, which is around 39 million rand profit versus budgeted 381 million loss. This suggests that with proper management, these entities can achieve better performance. Concerning patterns of issued continued bailouts without structural reform, the report also shows ongoing government support on land banks, 10 billion rands, Eskom's 254 billion package, suppose additional 3.8 billion rands request without clear evidence of fundamental business model changes or market-driven sustainabilities. Chairperson, I just want to ask the first question. The report shows Eskom municipal areas increased by 7.4 billion to 102 billion rands, while other entities like SAPO face delayed government payments. This appears to be a broader public sector cash flow crisis that threatens the sustainability of municipal state-owned companies simultaneously. What concrete measures are being taken to address the systemic issue of municipal debt areas across state-owned companies? The second one, Chairperson, how realistic are the current financial projections given the persistent underperformance patterns? Several entities, land banks 53.6%, NPL ratio, and also Transnet 9.9 volume shortfalls, SA's 19% revenue shortfall, are consistently missing targets. Are the budgets and strategic plans based on achievable assumptions, or do they reflect wishful thinking? Chairperson, on the debt management, Chairperson, this 35% spike combined with redemption nearly doubling from 151.6 billion to 301.3 billion, actually suggests the potential refinancing cliff. How sustainable is the projected increase in gross borrowing requirements from 434 billion rands in 2026-2027 to 588 billion rands in 2027-2028? What contingency plan exists if market conditions deteriorate or investor appetite wanes during the critical period? The last one, Chairperson, what are the implications of the declining foreign investor participation in domestic bonds from 29.9% in 2020 to 24.6% in 2024? While domestic absorption has compensated this trend, could indicate reduced could reduce confidence in South African assets or structural shift in global capital flows. How does this affect pricing power and market debt during times of fiscal stress? Chairperson, I think from what we have said already, once we are done with all the presentation and also our contributions, I will then also send to the Secretary my recommendations as you have suggested when we were talking to Honorable Tada. Thank you very much, Chairperson.
No, thank you, Honorable Kamete. And I can remember when President Zuma had flu, I asked him if he could get better. I'll send the same to you. To say, get better. But after President Zuma got flu, he then went and won an election. So just watch what happens, you see. Honorable Mkondo, let's proceed from there.
Thank you.
Thank you, Chair, for the opportunity. Good morning, everyone. Chair, without repeating what you said about the absence of the minister from this meeting, is that even the deputy minister, Sarupin, we miss him in these meetings. He hardly attend our meetings. Chair, I will start with the PFMA compliance. It is very sad, Chair, that a department like the Employment and Labor, the one that has to be exemplary in as far as improving the employment rate of South Africa, they are the culprits in underspending, and that has to do with their vacancies or personnel. And Chair, that also goes to the South African police services. With the high crime rate that we are having in the country, it is not acceptable that we can have a vacancy rate up to 2,000 from this department. I hope the National Treasury will pass the message to those departments. Chair, I will then go to the underspending on the grants. Chair, the underspending and non-spending of these grants, in most cases, specifically at local government level, it is caused by the red tapes that accompanies these grants. So, Chair, my question is there any means by the National Treasury to capacitate those institutions who simply can't spend because of these red tapes, like physical capacity building, to make sure that these funds are spent because they have an impact on service delivery. It is very painful, Chair, from our people on the ground to learn that a particular municipality or department has taken back so much amount of money, billions sometimes, back to the National Treasury because they couldn't spend. And only to find out when we go into details of the matter, you will find that it's because of these red tapes. Is the National Treasury ready to, if they can't do away with those red tapes, at least capacitate institutions to deal with those red tapes and deliver services to our people? Chair, with the debt management strategy, I feel that the minister should be the one who is able to take us through and answer some of the questions, because this strategy will have an impact in years to come to the economic status of this country. So, Chair, I'm not going to ask any question today because I feel some of the things we are being reactive here. We have to address things that will capacitate this committee to be proactive in as far as the oversight of the debt management strategy is concerned in South Africa. With the land banks, Chair, I will request that can they give us a breakdown of their grant and loan beneficiaries in respect of the demographics of this country? We applaud them that they have improved, but then we want to know as to, is their improvement beneficial to all the people of South Africa? The SARS, Chair, what are the challenges that they are facing, as they are saying they have collected, they did not reach their target? What are the challenges that they are facing? Are there any signs that they are going to improve? Because they promised us that they are going to reach those targets, and now they have not reached them. And what are the challenges that they are facing, Chair? We want to know, and if they will be able to improve in as far as that is concerned. The South African Post Office restructuring, Chair, is it aimed to restore the previous status quo of the South African Post Office, or are they working towards an institution with a new look and new objectives and revised roles and responsibilities? We want to see this institution competitive, Chair, in its operating space. The last one, Chair, will be on Denel. We have been having the border management agency. They are complaining about, that is just an example, They are saying they are in a very dire shortage of drones. Can these institutions, Chair, be encouraged to complement each other? Because I think Dinel can be able to assist the Border Management Agency to mitigate that shortage of drones. And to all the institutions, the government entities and the departments, can they, Chair, in as far as sustainability and revenue collection, can they be encouraged to complement each other? Thanks very much, Chair.
Thank you, Honorable Nkonto. I recognize that there are still 3 speakers on the platform. So I'm going to ask that we be brief so that we can get the Jobs Fund presentation and then establish a way forward in terms of some of the other items that are existing on the agenda. So I'm going to impress upon members to keep their inputs succinct and as possible without suppressing their right. Honorable Skete, and then Honorable Siate, and then Honorable Mwali. Let's in that order. Honorable Skete, I hand over to you.
And thank you, Chair. Chair, I'm struggling to put on my video, but let me ask the question. My first question, Chair, will be on Transnet. What is the projected income from the participation of private train operators? And is there a risk of Transnet losing key clients?
Chair.
Please proceed, Honorable Member. Honorable Skete, Honorable Kamete, please mute your device.
Yes, but there's something I wanted to check, Chair.
You are intervening on another member speaking.
No, I apologize, Chair, but I wanted to ask something.
Okay, Honorable Kamete, Honorable Skete, just hold on 1 second. Honorable Kamete, what's your question?
No, I wanted to check about the members being being seen on their on virtual or on the video.
No, Honorable Secretary requested at the beginning that he was having problems with his device.
Okay, thank you, Chair.
Thank you. Honorable Secretary, you can proceed.
No, thanks, Chair. My first question was on Transnet, Chair, is that what is the projected income from the participation of private train operators? And is there a risk of Transnet losing key clients due to the private operators, or is there adequate demand for rail services? And my next question, Chair, will be on the South African Post Office. Noting that a total of 656 retail branches have been retained as part of the Post Office point of presence network, by the end of Q3, the entity employed 6,026 permanent and non-permanent staff. The liquidation of the Post Office will have major socio-economic implications for its users and households of its workers. Is the National Treasury committing to further support the Post Office recapitalization to ensure the business rescue plan succeeds? And secondly, Chair, noting the current impediment between the Post Office and SASSA on the payment of grants, what impact will the termination of the Master's Plan have on the revenue generating strategy of the Post Office? And how is the National Treasury supporting the resolution of the relationships? Thank you, Chair. That was my questions.
Thank you, Honorable Skete. Can I all recognize Honorable Siat?
Greetings, Chair. Am I audible and the
You are
members
both
see me?
audible and visible.
Oh, okay. Thank you very much. So, Chair, mine is going to be few questions on the NEL and SAA. Well, on the NEL, I would like to just find out, since the NEL remains affected by liquidity and insolvency challenges and has significant growth potential with opportunities worth over 50 billion, what is then the opportunity cost of the NEL not undertaking opportunities due to the current financial limitations? And furthermore, is the National Treasury considering further financial support through guarantees or recapitalization to enable the NEL to exploit the existing opportunities to support our domestic industrial development and position the NEL as a key innovator and manufacturer? And then I do have some prepared questions for the SAA. So, Chair, SAA currently in a growth trajectory with 21 aircraft and plans to increase them to 50 by the end of the 17th administration. The entity, by the end of the 7th. So the entity made a profit of 39 million, which was enhanced by the lower than projected operating expenses by 20%. So SAA did not meet its revenue targets by 19%, indicating an inability to attain its projected demand as it is not operating in all planned routes and frequencies. So noting that the SAA reported an EBITDA loss of 199 million, however, impairment reversal recoveries and net finances income contributed to the return to the profitability. So what is then the operational area require enhancement to position ESCOM to have a position earnings before interest, taxes, and amortization? And then with SAA projecting growth to 50 aircraft, then what is the current market share of SAA? And is its growth projection predicted on a major market share regaining? Is the National Treasury again considering any capitalization for SAA and recognizing its positive growth trajectory? And what are broadly the financial demands of SAA to position it as a dominant player in the market domestically and continentally? And those will be my questions, Chair. Thank you very much.
Siate. Lastly, Honorable Mwandi.
Thank you so much, Chairperson. I will try and ask you just a few questions here, Chair. Can you hear me?
Yes, we can hear you and we can see you.
Okay, thanks, Chair. ESCOM is owed by the municipalities over 100 billion, Chair. It has increased this quarter by 7.6, I think, from the presentation, 7.6 billion in quarter one. Now, Chair, my question would be, what is the recoverability of this debt owed by municipalities? This is coming as a result of the past week. I was in oversight with COCTA over municipalities in the Northwest and some in Johannesburg. The level and the amount that is owed by these municipalities to ESCOM, and some they've not even made arrangements as to paying back their monies to ESCOM. Some have made those arrangements, but they've not kept their commitments. So then my question then comes as to what is the recoverability of this amount to ESCOM, and what is it that National Treasury is doing to assist ESCOM to recover these amounts from these municipalities that are not paying back to Eskom. Chair, the reason why I ask this is because the other question I have is, are we by any chance funding incompetent? Because really, some of the reasons why these municipalities are not paying Eskom the amounts that are due to Eskom is, Chair, as a result of the instability that has been caused by politics that continues to instabilize municipalities, and some is because of corruption, and some, Chair, because of many other reasons that are seen in these municipalities. So are we by any chance then funding this incompetence? Because we've, if you will remember from our submission also, when there was a proposal for an 80 billion to be given to Eskom, that we are actually approving that Eskom must get 80 billion for the debt relief, when Eskom is being owed over 100 billion by the institutions or by the municipalities. If they can recover that 100 billion, therefore we would not have to approve another bailout of about 80 billion as a result, or in form of a debt relief. One last one, Chair, is to maybe substantiate my submission, is that, Chair, you find that executives that are running these institutions that are not adhering to PMFMA, some MFMA, they are paid bonuses, some even performance bonuses. I'm not sure what performance bonuses that they are being paid to these executives when these institutions are not performing. Some, as presented here, have not met their target for Q1. And there were some in some of the committees of parliament saying this is what they're going to do, this is how they're going to do it. But we are just at the end of, or we're just reviewing Q1, and they've already not met their targets for Q1. So really, that's why that's where the question then comes as to, are we by any chance funding incompetence? Because this is pure incompetence if you say you are going to do this and you don't do it. And this has been happening for a very long time, and it ends up coming back to the same pest that is being squashed, to say, okay, please come back with bailout. Please come back with bailout. So thank you so much, Chair.
Thank you, Honorable Wali. I think, the reason I'm requesting a specialized session with the Minister of Finance and some of the debt instruments is precisely because some of them are political in nature. And I think the Minister of Finance needs to guide, because I think given we can talk about governance issues in state-owned enterprises, but there are two, the maturation of the debt that, as you've indicated today, and how that debt is going to be funded is a matter that needs genuine consideration, because its implications aren't just for the medium term, they are generational by impact. And so we can borrow from tomorrow to fund today, but let's also be clear that tomorrow will have other difficult problems, given the fact that projected GDP growth is sub 1%, and by GDP numbers that came out yesterday, quarterly is 0.6%. So it tells us a story that we are living beyond our means. But more, and therefore the question I wanted to put forward is the question as it speaks to the PIC. The PIC has got over 3 trillion rand of assets under management. And when I look at, I want to perhaps maybe get an understanding as to there's a new board at PIC that was announced by Cabinet last week. So I want to have a better understanding whether, in mitigating some of the debt questions and the maturing debt that's coming up this year, what is that in relation to the PIC, the contribution of pension funds, so that we can begin to project what kind of future we're going to have. Because from what I could hear, and that's why I don't want to misinterpret it, is because the instruments being used to service the debt maturity that's coming out this year is about restructuring other debts. And so I want to understand how that relationship works. I don't want to be confused walking out of this meeting, because I want us to understand as South Africans what is our fiscal position as it speaks to debt that is maturing this year. So I'm not sure if the presentation covered that. I'm going to impose upon National Treasury. There are a vast number of questions, naturally. Some of them can be responded to in writing, but as I've already committed to, I think A, it was ambitious to cover all the detail we wanted to cover today, but B, there's a lot of questions that are of urgent that require another session. So I'm going to impose that we have that. So when you get your responses, if you can be brief, some you can submit in writing, but ultimately we're going to have a secondary conversation. So I'm going to impose upon you to keep to time. I want to move on to the Jobs Fund presentation at least by 11:30. So the team at National Treasury, you can proceed from there and try and be brief and prompt with your question without avoiding the accountability issues. Over to you. And then the last point I'll make is, of course, you don't have, some entities fall within their line functions. So their qualitative programmatic work sits there. It's not this committee's line of accountability, if I can put it that way. But the financial appropriation that goes to those are then the function of the committee, and therefore we have to account on that basis. Over to you.
No, thanks, Honourable Chair, Honourable Members. Thanks for the questions. I think we will take your lead. I think what we'll do is I'm going to get the debt management team. Wanga will basically start with responses. So I think Wanga, let's keep it to the point and brief. So she will start on the responses on the debt management. And then I'll just hand over to Lefenze, Sulufelo, Tabang, Modisa, and George to deal with those specific questions on the SOCs, but just keep it to the point and be brief. And then I'll quickly wrap towards the end, Chair. Wanga, over to you.
Thank you, Ravesh. Thank you, Chair and honorable members. I have just a few questions that I will respond to. The first question was asked by Honorable Bateman, if I'm not mistaken, around reducing the long-term cost of funding. What is important to note here is that, firstly, what you want to see to reduce the cost of borrowing is you want to see the gross borrowing requirement coming down. And how you actually see that is it's through the improvement of the revenue collections. And so a lower gross borrowing requirement reduces the stock of debt and also reduces the cost of borrowing as well. So that should be really the target. However, if that is not possible, we have to tactically see how we address this. And how we do this is how we issue our instruments, the combination of instruments that we use. For example, for the past 2 to 3 years, we've introduced a floating rate notes. So floating rate notes have a lower cost of borrowing. And through the introduction of the floating rate notes, together with using Treasury bills, we've managed to lower the weighted cost of funding. Also, there was a question that Honorable Bateman also asked in terms of a lower inflation target. We are still working on that, but maybe just to respond to that is lower inflation means a lower interest rate, lower exchange rate, lower revaluation, especially on our inflation-linked bonds, which also means that it would potentially reduce our debt service costs. There was a question on why debt service costs are lower, and the response is that the payment on debt service costs are not equally spread over the year, and hence you can't really take the 5 months of spending and assume that would be the debt service cost for the year. Secondly, the other impact, impact the debt service cost is actually the mix of instruments that we use in order to issue debt or raise funding. And for the past couple of months, we've issued a lot of floating rate notes, which are cheaper in terms of the cost of borrowing compared to the fixed rate bonds, and hence you will see a lower debt service cost. Last questions was, okay, second last question was on the Multilateral Development Bank. There are no conditions attached to those loans. They are just policy-based loans that support the policies that we want to institute. They support Operation Vulindlela and what we're trying to do in the energy space to the extent, and they are cheap compared to how much we would raise in the market. And so to the extent that we still have foreign currency commitments, we still need to borrow in order to meet those commitments to ensure that we're able to redeem and service that debt. Lastly, on the question around pension funds, Chair, if you look at the slide where I showed the holders of government bonds, you will see that pension funds are actually holding around 22.8% of government debt. Also, just to say that pension funds have their own mandates, internal mandate, where they determine where they would need to invest their funds. So it's not necessarily that they invest all their funds into government bonds. They've got other stocks and other portfolios in which they invest. However, assets today, they hold about 22.8%. Unfortunately, I don't have the exact numbers in terms of what PIC specifically holds, but that 22.8% represents all the pension funds. Thank you so much.
Thanks, Wanga. Lefenze, can you keep it brief, please? 1 minute for responses there. Lefenze? I think let's move on then to I think Chair, while we wait for Lefenze, let's move on to Zulufelo, Tabang, Modisa, and George. Thanks. Please, guys, keep it brief. Zulufelo, Tabang, Modisa, George.
Okay. I'm not sure. Can you see me? And am I
Yes.
also audible?
Yep.
Just want to make sure. Okay. Good day, honorable members. So for me, I will be tackling questions that were posed on Denel. So the first question relates to the operating costs in relation to the division within Denel Landward. So Denel is experiencing an indirect labor costs because it is not operating at full capacity. So as projects come on board, those projects from the Denel order pipeline, then they will be able to address the overcapacity within the divisions, but those are still employees that are still required within the division. It's just that projects haven't taken up as yet. And as suggested, we can also request Denel to also provide further detail. And then there was also a question on what is the opportunity cost in an event that Denel doesn't achieve the project or doesn't execute its order pipeline. So obviously, when it gets there, Denel will not be able to achieve some of its revenue targets or projections. And there was also a question on the the authority that the minister has in issuing guarantees. So the PFMA guides that the minister may issue guarantees. So it's just in the interest of time, if we go to section 66 and 70 of the PFMA, the minister issues guarantees under those sections. Thank you.
Thanks, Zulufelo. Tabang, then Modisa.
Okay. Good morning. Thank you, Ravesh. Good morning, honorable members. I think from my side, just quickly, because there were a lot of questions on Eskom, but just to run through them quickly, I think the issue of the pricing and tariffs and the cost escalations above inflation increases. Just to mention quickly that the NESA, as the independent energy regulator, is mandated by various legislative and regulatory instruments like electricity pricing policy, the ERA, MYPD methodology, and the guidelines to ensure that only efficient costs that are incurred by the applicants, and including ESCOM, are passed on to the consumers in terms of the approved prices and tariffs. So that's the mandate that NESA has to. From our side, we do ensure that ESCOM runs its operations as efficient as they can, and we also track around the savings that they are targeting in their strategic plans. Like, for instance, in the quarter, they have achieved 3.2 billion savings and are projecting 21 billion towards the end of the year. It's unfortunate in some cases because we had experienced significant energy supply crisis to a point that ESCOM had to run their OCGTs or diesel bands generators, which are quite expensive. So it was negating some of the savings that ESCOM are achieving. But as part of the conditions, we've got strategic conditions and operational conditions. As part of the operational conditions, we monitor how ESCOM is performing on their costs and how they are lowering their costs. And some of the instruments that we have previously identified was around the primary energy costs, which relates to coal contracts. And at that time, it was very difficult for ESCOM to try to renegotiate some of the existing contracts because they are locked in. So the approach was to when these contracts come to an end, they should be able to negotiate better prices. And going to municipal debts, and I think we can provide a comprehensive response even from the IGR. But the municipal debt relief program has not really yielded a positive result as anticipated, because most of the municipalities on the program, they are struggling even to meet the basic conditions of settling their current accounts, which is a key condition in terms of writing off some of their debts. So we have adopted other measures like signing the DAA distribution agency agreements with them. As Honorable Muali was saying, we have identified some of these challenges relates to how these municipalities are being run. So we will need to capacitate or ensure capacity in that regard in order to holistically achieve these to get the results. And I think relating to that, I agree that if we don't resolve the municipal crisis, they will have a huge impact on ESCOM performances, and they may result to additional financial support in future. So our keen interest to resolve it as soon as we can. I think, Ravesh, if we just to keep it short, if we have left some of the questions, we can respond to them later. Thanks.
Modisa, you got a minute, and then George, you got a minute as well. Thanks.
Okay. Morning, Honorable Chair. Thanks, Ravesh. Morning, Honorable Member. I will deal with questions on SAA and Transnet just briefly. So on SAA, is there any consideration for bailout? No, there's no any consideration for bailout. What is the market share for the airline? So if you recall, the airline went into the business rescue process, and it has been trying to recover from that. So the market share is still significantly lower than what was there before the business rescue process, and probably around less than 40% or so of the current the domestic market share. Is there what the requirement in terms of the operation for the airline to be able to register positive EBITDA? So what is needed are two things. The airline needs to scale its operation, but also scale in a manner that intensify its own route operation. So that part of its current strategy is exactly to work on that process with the projection that it will be able to register EBITDA on the subsequent financial year. On Transnet, what is the projected income on the participation of private sector operator, and whether there is a risk of losing customers or there is sufficient demand? So there is a sufficient demand in terms of the rail operation, and also if you can even look at the port operation as well. In terms of the projected income, if you recall, the Minister of Transport only announced the introduction of private operators on the 28th of August. So that process is still very early on, and it's at this point in time, there's no projected income and so forth. For the budgeting process of the entities such as SA and Transnet, are there any just wishful thinking, or the projections and the budget are realistic? So you may recall that the challenge with the environment is that some of the operations are really unpredictable. You cannot have all the time hitting the exact target. So what we tend to focus on is mostly on the actual trend itself, whether the entities are on the positive trend or on the negative trend, and also look around the variance. But it's very difficult. For example, if you take Transnet, it's not easy to just, take all the variables in place and have a certainty of the exact target that you will hit on your projections. A question on, can the guarantee conditions attached to Transnet guarantee be shared? I think Ravesh touched on it on his introductory remark, that we're still at the process where we are concluding and finalizing the revised conditions. From there on, when that process is concluded, I think we should be in a position to share the revised conditions. Then on SAA, I think there was a question around, maybe just a clarity question, what are the supports around 1 billion ZIM? Is it a new bailout or no? It's not. There's no bailout for the airline. And also, just to indicate, the airline does have its own cash flow projections. It's a detailed information that they do have and manage at their own operational level, particularly around the finance system. We don't have the actual numbers at this point yet, but I think through the alliance, those can be obtained. What is the status of the PSP on the rail and the ports? The PSP unit was only established around March 2025, so the pipelines of the PSP project are still yet considered, where the process is at early stage. The only PSP that that is already known and it has quite an advanced stage was the PSP around the port on the DCT Tier 2 terminal, which is currently under court to deal with the issue relating to the selection of the preferred bidder. But the rest are still at the new state. They will, over time, will have a much more concrete information to share around the status of the PSP. Also, just on the question around whether there are future bailouts for Transnet, there isn't any future bailout. Thanks, Ravesh. Back to you. Over to you.
Thanks, Chair. Sorry about that. We are just over time, but we'll just give, last but not least, George on the SAPO. There were just a few questions on the post office. George, in under a minute, please.
Thanks, Ravesh. So there are a few questions by the honorables, but mainly the questions revolve around what is the if you had to summarize the questions, they revolve around what the 3.8 billion request is for SAPO, and whether SAPO aims to restore the old post office as we know it, or it's looking to revitalize itself to a renewed one. So basically, in summary, is that the answer is no. They're not looking to rehash the old post office as we know it at the mail lettering company. They're mostly looking to modernize the operations of the entity, basically have a whole digital transformation strategy around the post office, and also enhance some of the revenue mechanisms that they've had before. And this also reads back into their digital transformation strategy, where they want to diversify a little bit away from the traditional mail delivery business into a more efficient business way, instead of couriering letter through the whole mechanical system, what they had old, what do you call it? their information systems, which relied a lot on physical sorting in the warehouses. So all this will be digitized, and whilst they requesting this, and it was all set up in the business rescue plan and the allocation of the 2.4 billion towards this. A lot of the work had to be done, the groundwork needed to be done, whilst the entity also grapples with itself staying in the market, where it also just continues to stay afloat. And some of those challenges have come around the creditors taking it into business rescue, and part of the funding has been paid over to the creditors. And I need to mention that the post office is still in business rescue under the grace and some of the goodwill of the creditors as well. And then there's an issue around what some of the SOEs, including SAPO, what their contribution is to the municipality debt. For post office, they have part of the business rescue. They have reduced the number of outlets from about 1,050 and to the number that we see now in the presentation as an updated of about 600 offices across the board. And part of the biggest cost in post office was municipal cost to offices that are either not entirely operating or just land that is not yet developed yet. So a lot of these costs have been done away with, and part of the payment is done within the SAPO's universal service obligation. This isn't a standing allocation in SAPO, and they make those payments through there. So, thanks, Thomas.
Ulrika, I don't know if you got any.
Okay, just to quickly answer the questions around financial accountability and financial misconduct that was raised by Honourable Bateman. Just on the executive authority and accounting officer responsibilities around financial misconduct, the Treasury regulation says if an accounting officer, just to clarify, is deemed to have committed financial misconduct, then it's up to the executive authority to take the necessary action. What the National Treasury is responsible for is, one, alerting the executive authority and may direct how that investigation happens. So it's not necessarily the Treasury's responsibility, or the Treasury is not empowered by the legislation to take the financial misconduct. So in relation to unauthorized expenditure, so unauthorized expenditure, as you know, is really an overspending on a vote or a main division of a vote. So given that Parliament authorizes expenditure through the Appropriation Act, spending more than that requires some kind of parliamentary process, but it also requires that the executive authority then takes this action. We can just say how this happens in the case of defense. And then just in relation to municipalities, the Municipal Finance Management Act has similar provisions around financial misconduct. It goes a little further in the MFMA in relation to what would be deemed as financial misconduct by municipal managers or who are the accounting officers. Thank you.
Chair, that's it from our side. Over to you. Thanks.
Thank you. I mean, some of the questions will have to be put forward in writing. Honourable Bateman, I'd like to, if I can prevail upon you, and if we can start another round of questions, it'll begin a whole new session. So I am prevailing upon you because I had requested that we have a special meeting that will involve the Minister of Finance, and we're trying to look in the background about what the ideal time, because there are many questions that still need answering and still need ventilating. So unless, if I can prevail upon you to park it for there or put it in writing, is that acceptable to you?
That's fine, Chair. I feel like one or two of my questions are important and haven't been answered, which is very unsatisfying. But I do take your point, and very happy to or willing to defer the conversation. Thank you.
Yeah, there are many of us would feel in a similar manner, given the rush and the time constraints and the amount of work that is. So I want to prevail upon you. What we will in all probability do is that we might have a session next week that begins at 8 a.m. virtually, so that we can proceed. I just want to confirm availability of various principles, and then we can go from there and then take the questions. But let me allow the presentation from the Jobs Fund to proceed, because that can be tabled and then you can proceed from there.
Thank you, Honourable Chair. I note your comments earlier on about the grey suit, Chair, but I apologise. I'm still reeling from the sporting results of the weekend, so it's going to have to be grey today, Chair. I'm sorry about that. Honourable Chair, members, thank you very much for the opportunity to present today. The Jobs Fund stands as a beacon of innovation in South Africa's employment landscape and a testament to government's implementation capability. In a country grappling with high unemployment and constrained fiscal resources, the fund has proven that strategic partnerships, demand-led interventions, and catalytic funding can unlock scalable, sustainable job creation. Today, we share not just numbers, Chair, but stories of transformation, of young people placed in their first jobs, of women in rural areas building micro-enterprises, and of communities revitalized through inclusive economic participation. My name is Najwa Ali Idris, and I'm responsible for the fund. I'm joined by my team, Xavier, Ben, Nazim, Helena, Eldon, Jill, and Kalifang today. Our purpose is to report to this committee the Jobs Fund's performance, the impact it has had, and to provide a few insights on policy considerations that have emerged from our work. Next slide, please. Our presentation outlines how the Jobs Fund empowers futures through job creation. We'll explore its model, performance, impact, and policy implications, culminating in a call to action for sustainable employment strategies. Next slide, please. The fund is a program of the National Treasury and it's administered by GTAC. It was established to catalyze innovation, and it does this by sharing risk through co-funding interventions that address specific barriers to job creation. It is a space where government can experiment and test new ways of creating sustainable jobs by intervening on both the supply and demand sides of the labour market. It should be noted, though, that the Jobs Fund was not designed to be a mass employment program. Rather, it complements other government programs that focus on creating work opportunities as opposed to the creation of sustainable jobs. Knowledge sharing is a foundational pillar of the fund, which derives from the fund's robust reporting, monitoring, evaluation, and learning framework. The fund hosts knowledge exchange sessions, publishes newsletters and webinars, and through these activities, we advocate for the adoption of successful job creation models, as well as for the wider adoption of the Challenge Fund instrument. To extend its reach, the fund works with intermediaries, strategic partners, leveraging their networks and expertise to access additional resources, both technical and financial, to support sustainable job creation. The Jobs Fund is a catalyst for innovation. It doesn't prescribe solutions, it invites them. By co-funding and piloting new approaches, it complements government's efforts and builds a robust ecosystem for sustainable job creation. Next slide, please. Challenge funds, by their nature, are market-driven, competitive, transparent funding instruments. The Jobs Fund has used this instrument to solicit solutions from the market, the private sector, not-for-profit organizations, and others on how best to solve for high levels of unemployment and create sustainable jobs. It is important to note that the fund is not prescriptive on how this challenge should be solved. Through the application of Challenge Fund principles, the Jobs Fund has demonstrated that if implemented correctly, this funding instrument promotes the effective development of strategic partnerships between government, private sector, civil society, the donor community, and others. Through our partnerships, the fund has leveraged public funds to crowd in matched funding, technical expertise, and additional implementation capacity. And we have also achieved a more equitable sharing of risk, as well as wider access to networks that support sector development and beneficiaries. Challenge funds are about unlocking market-driven solutions. They crowd in partners, share risk, and ensure that only the most impactful ideas receive support. This model fosters innovation and strategic collaboration across sectors. Next slide, please. Factors impacting performance. The Jobs Fund operates within a specific economic context and inevitably is affected by external challenges such as low growth, climate events, and institutional constraints. Next slide, please. Despite these challenges, the fund has demonstrated its agility in responding to economic shocks. For example, during COVID-19 pandemic, recognizing the negative impact of the pandemic on strategic partners and SMMEs in particular, as well as the importance of implementing guardrails to secure public investment, the fund within 3 months responded with a 240 million support package that it was informed by the specific needs of its project partners, saving more than 10,000 jobs. It did this, Chair, without foregoing its rigorous due diligence processes. Next slide, please. The fund supports sustainable job creation interventions across 4 funding windows, namely support for work seekers and institutional capacity building. This is where we focus on demand-side interventions. And enterprise development and infrastructure development is where we focus on, the first one was the supply-side interventions, and the second part is demand-side interventions. It is important to note, Honourable Chair and committee members, that all interventions supported by the fund are demand-led. For example, we do not support applications that focus on delivering training without a clear pathway to a job post-training. The fund has led with this approach, and gradually we are seeing greater market adoption for this approach. To date, the fund has implemented 11 funding rounds and is currently appraising applications for its 12th funding round, which focuses on the green and informal economies. We note that there continues to be strong demand for funding. By the submission deadline, we had received 195 applications with a total grant request of 11 billion rand and matched funding offered of 12 billion. Through its funding windows, the Jobs Fund has supported a range of project models, many of which show promise for scale and replication. Next slide, please. Of course, I said we will talk about our performance metrics. Moving to our metrics from inception to date, Chair, the fund's headline achievements are as follows. The fund has implemented more than 180 job creation projects, providing clear evidence of what works and what does not work. When reviewing the impact on the labour market, we can report on a combined number of over 755,000 jobs and training opportunities facilitated, with 98% of which benefited PDIs. In disaggregating this number, we report more than 200,000 permanent jobs and placements, more than 100,000 internships and shorter-term jobs. We also facilitated access to work-related training to more than 400,000 participants. In addition, Chair, more than 80,000 SMMEs and emerging farmers were supported. Noteworthy, though, is that an additional 70,000 jobs were created post the grant, speaking to the sustainability of the interventions supported by the Jobs Fund. Also noteworthy is that against the 7.5 billion grant funding that has been disbursed, the fund crowded in another 15.3 billion in matched funding from private and NPO partners, demonstrating a clear value for money proposition. That is, for every 1 rand government contributes towards job creation, Jobs Fund partners have contributed 2 rand. These are not just numbers. They represent lives transformed. The fund's value for money ratio and national footprint are testament to its efficiency. Next slide, please. The Jobs Fund has a national footprint with many of our implementing partners working across multiple provinces. Jobs are being created across all regions, reflecting the fund's inclusive reach. This geographic spread ensures that no community is left behind in the journey towards economic empowerment. An ongoing challenge, however, is to find strategic partners and intermediaries with feasible proposals in these underserved provinces, especially those partners that focus on the demand side of the labor market. Next slide, please. Of interest to the committee may be the distribution of jobs facilitated by job types. Through its robust monitoring and reporting framework, the Jobs Fund tracks each one of these indicators. The largest share of the jobs that have been created are new permanent jobs and permanent placements, the latter demonstrating positive impact of active intermediation in the labor market. The findings of the Tracer study commissioned by the Jobs Fund showed that 84.2% of enterprise development beneficiaries are still running their businesses, while youth who participated in the support for work seekers projects were more likely to be employed than their counterparts in the QRFS, proving that targeted interventions work. Next slide, please. 3.1 billion has been injected into the economy via stipends and salaries. This is a direct economic stimulus, fueling local economies and supporting livelihoods. Next slide, please. 66% of grants disbursed went to enterprise development, followed by support for work seekers at 20%, infrastructure investment 11%, and 3% to institutional capacity building. The fund has prioritized supporting businesses and entrepreneurs. Our goal has been to stimulate job creation through business growth, innovation, and sustainability. We also recognize that enterprise development tends to have a multiplier effect on employment, especially in underserved or high unemployment areas. 46% of projects were implemented by the private sector, 41% by NPOs, and 13% by public sector partners, demonstrating our market-driven approach to job creation and our preference for agile, impact-oriented partners. It also demonstrates the fund's collaborative delivery model, where the fund leverages the expertise, networks, and operational capacity of non-governmental actors to the benefit of scaling its impact. A key intervention strategy for job creation deployed by the fund is its focus on enterprise development. And to that end, 118 projects has been supported under this funding window. We say sustainable enterprises supports sustainable jobs. The fund has been a catalyst for private sector-led job creation. It has encouraged innovation and sustainability in employment solutions, and with its partners have built ecosystems of support around entrepreneurs, small businesses, and work seekers. Next slide, please. Our partners are the backbone of implementation. Their expertise, networks, and commitment amplify the fund's impact and ensure sustainability of jobs. We've partnered with a range of strategic partners across multiple economic sectors, which include the informal economy, health, agriculture, financial services, the digital economy, early childhood development, construction, amongst others. Next slide, please. With regard to the fund's operational efficiency, through its utilization of the Challenge Fund instrument, we can report with operational costs at just 12% of funds disbursed, the fund is lean yet effective. Its cost per job is competitive, and its model attracts significant matched funding, demonstrating fiscal prudence and efficiency. This 12% includes additional value-added services such as monitoring and evaluation, independent governance, electronic grant management platform, and specialist technical support. It is important to note, Chair, that challenge funds are high-touch funding instruments where operational costs can range between 15 to 30%, and thus in this context, the Jobs Fund has done well. Furthermore, the job tenure of jobs facilitated by the fund tends to be longer term. On average, Jobs Fund jobs have a duration of 3 years and more. I've already spoken about how effective the fund has been in its utilization of public funds, leveraging 5.3 billion from its partners against the 7.5 billion that we've disbursed. Honourable Chair and committee members, while the numbers are important, it is the transformative impact that the fund has had on ordinary South Africans that must be highlighted. If you will, please allow me to share a short video that demonstrates the experience of a participant through our partnership with Sparrow Society. This project focuses on advancing gender equity by empowering women through economic opportunity and offering strategic support for survivors of gender-based violence. They offer a holistic approach to empowerment, skills development, job creation and enterprise support, psychosocial care, and gender advocacy. Eldon, could you play the video, please?
I'm Liziwe Bota. Sewing is in my blood, in my veins. Last year, I sat down with my family. I said to them, I want to open a business. I think my fear was that I start the business and my business crash and I will become so scared. But guess what? Something was pushing me inside that started this. I remember I said, Kate, I want to do these bags of Elizabeth Adam, but for myself. And then I remember Kate said, good girl, go for it. And I started there. I've been working for people, making money for them. But today now I'm working for myself. Money ching ching in my bank. That makes me feel great. I remember you sent Lorraine to come and teach us how to make these bags. The first time it was like traumatized. We were all traumatized because everything must be perfect. I said, guys, don't worry, we'll get it, we'll get it. Let me tell you, I love doing those bags. I make sure I'm doing the first stitching. I prepare my bags. The next day, I will do the finishing because I know the finishing is very hard. My brother's friend said, what are you doing? I'm like, no, I'm making these bags, Elizabeth Adam. What? Elizabeth Adam? I said, yes. And then they said to me, you are a star? I said, yes, boom, I am a star. Starting a business is not an easy thing. I just want to thank God for what He did. A black woman who lived with a disability. I am proud of myself. I did it. If I did it, why not you? I did it. The dream of this business, Liz Accessories. I want to teach young people live with a disability. I want them to take the experience from me and do the same thing that I'm doing at home.
That is but one example of the lived experience and the impact that the Jobs Fund has had. I'm not going to go through the detail of the following slides from 15 to 17. Suffice to say that it provides compelling examples that illustrate innovation and inclusion. They provide a snapshot of the impact the fund has had across a range of sectors, whether it be digital jobs, BPO, automated skills, from rural women to early childhood development, from microfinancing, franchising, to green economy and value chain transformation. The fund is shaping future-ready industries. Please move to slide 18, Alden. So what are some of the things that we've learned? A case can be made for the continuation of the use for the Challenge Fund funding instrument. The Jobs Fund has demonstrated that if done correctly, this funding instrument can drive efficiency in government spending by leveraging private and NPO sector contributions to scale impact within a constrained fiscal environment. It drives innovation in that funds are allocated to the most impactful proposals and enables better risk sharing. The results achieved thus far also advocate for focusing resources on demand-led interventions. These are more effective in creating sustainable employment, and that training should be informed by the evolving needs of the labour market. Support to SMEs should be holistic. This includes appropriately structured financial and non-financial support. Patient capital that includes guarantees, revenue-based funding, and blended finance. These are but a few of the key instruments to consider. Next slide, please. The Jobs Fund has also demonstrated the importance of creating space within government for experimentation, for the development of proof of concept through risk sharing. This, together with robust monitoring and evaluation, will support the effective utilization of limited public resources. Next slide, please. In conclusion, the Jobs Fund complements other government programs, supporting both short-term job creation and long-term employment solutions. Limited public resources require prudence, innovation, and evidence-based decision-making. Next slide, please. The fund has used its implementation capacity to support the Presidential Youth Employment Intervention, expediting the implementation of the revitalized National Youth Service, designing and implementing the Innovation Fund on behalf of the Department of Employment and Labour, and continues to manage the National Pathway Manager, whose institutional capacity was built through the Jobs Fund support and who today provides the electronic platform for SAYouth.mobi, a platform that was launched during COVID-19 to support young people to navigate multiple pathways and connect with the labour market. This platform facilitated the rapid implementation of the Department of Basic Education Teacher Assistant Program and other employment stimulus initiatives. To date, more than 800,000 formal, informal, and public employment program opportunities for young people have been made available through the platform, confirming the Jobs Fund's initial investment in institutional capacity building. Chair, we must balance short-term gains with long-term sustainability. Honourable members, the Jobs Fund is more than a funding mechanism. It is a catalyst for change. It has demonstrated that with the right partnerships, innovation, and accountability, we can create jobs that last, businesses that grow, and communities that thrive. As we look ahead, we ask for your continued support in scaling what works, deepening impact, and ensuring that every rand spent delivers a real, measurable value for South Africans. Together, we can transform lives and empower futures. Honourable Chair, committee members, I thank you for your time.
Thank you very much. Can I just, while I've got, if there are quick pressing questions, I mean, really, I don't think we need to spend, the presentation is self-explanatory. So let me just take one or two questions. I don't think we need that many, and it can be brief. Honourable Wakelin and Honourable Mkonto and Honourable Bateman. If we can be brief, please, that'd be helpful.
Chair, thank you very much. Unfortunately, I have to leave at 12 o'clock for another meeting. I just got three pertinent questions. The one is the cost per job is a massive problem for a lot of reasons, and I assume there is lots to be learned from the Jobs Fund that we can incorporate in reconfiguring and how we're going to address unemployment in this country. So the matter of cost per job is a concern. I would like somebody to respond to that. The second matter is that there are so many interventions at the moment from multiple departments And we as a committee has suggested and submitted the urge of reconsidering and redesigning the whole approach of unemployment, and particularly around the jobs grant of unemployment grant that we're looking at next year. So those are the two fundamental questions. Chair, I will leave it at that. Thank you.
Thank you, Honorable Waitlin. Honorable Mkhonto.
Chair, thank you. Chair, my first question, Chair, will be, is there any relationship that the Job Fund has with the entities of the Department of Employment and Labor, specifically the Labor Activation Program and the Department of Small Businesses? Because when I'm listening, Chair, I hear a duplication of some activities, of some programs in this Job Fund. Thank you.
Thank you, Honorable Mkhonto. Honorable Bateman.
Thanks very much, Honourable Chair. And I don't actually have any questions as such, but except I would like to just thank Mrs. Ali Idris for an excellent presentation and for the very good work that you're doing. And just to say I welcome the emphasis on the demand side rather than supply side, and the aim being to create sustainable jobs. Thank you.
Honorable Siate. I think that might be a legacy hand. Let me get Honorable Siate.
Chair?
Oh, sorry, Honorable Siate. Yes?
Oh, yes. Can you see me also?
I can't see you.
Oh, okay. Let me just fix the technology. I'm trying. Can you see me now?
No, we can't see you. But you can proceed with your question. I think if we keep it brief, let's go with the question.
Oh, okay. I can proceed even without the face.
Yeah. Yes. Because we're trying to save time. So if we wait for you to fix the technology, it'll take a while. So we can.
Oh, okay. Thanks very much for that, Chair. So I have two questions only. The first one is, how is the Jobs Fund leveraging the partnerships to promote the SMME value chain in the sectors they participate in, and also to support SMMEs through training and development support? And the second question I have, Chair, is which economic sector have significantly supported the fund and which sectors require enhanced focus? Thanks very much, Chair.
Thank you very much, Honorable Skete.
Thank you, Chair. My first question, Chair, will be, what measures are required to massify the fund and increase its impact? And is this approach scalable as a whole of government approach? The second question is that, can the National Treasury ensure that all employment programs have a tracer study as a mandatory action, as this enables the government to enhance the outcomes of its job creation programs and training programs? And lastly, Chair, what is the geographic spread of the 3.1 billion injected using a rural township and urban CBD location? And to what extent are there rural and township partnership developments? That's my three questions. Thank you, Chair.
Thank you very much. I think maybe if you can respond, I mean, when I'm looking at your next round of funding and the number of jobs anticipated, it is common cause that the ratio of the cost per job seems to be higher, and it's extraordinarily higher than eventually what on a monthly, if you were to do a monthly stipend to each of the jobs, they would be higher than the minimum wage in the country. So I just wonder whether, or the median wage in the country. So I just wonder whether a disbursement as a grant would not be. And then I think my questions are also, if we integrate the multiple funds that sit in this space, whether we couldn't create a better pool and a much more sustainable outcome. So, ma'am, let me allow you to respond in a few minutes because I think the questions were quite few and succinct. Thank you.
Thank you, Chair. Thank you, members, for the questions. There's always concern about the cost per job, and we operate across multiple sectors. And there are times, for example, if we are working in agriculture, there will be a range in terms of the cost per job. So we provided you with an average. For example, if we intervene in agriculture, and the type of intervention is to provide enabling infrastructure, that immediately pushes up the cost per job. If we are working in the BPO sector, we can bring down that cost per job. So depending on the sector, depending on the level of job, all of those factors, Chair, impact on the cost per job. And this, what we're talking about, the cost per job here, and I think that we are always worried as a country. We should only be creating jobs at a particular cost. But if you are looking at sustainability, if you are looking at walking the development path with an enterprise, those are all things that affect the ultimate cost per job. We're just talking here about the amount of grant funding that catalyzes it. We are not even adding into this necessarily the funding that is provided by our partners and the institutional infrastructure that they already have in place and costing that infrastructure. So the cautionary note here, Chair, is about saying, when we go down the road of saying, when we create a job in our country, it should be at that particular price point. We are not understanding the real implications of what it takes to create a job in our economy and in the multiple sectors and in terms of multiple job levels, Chair. There was a question about our relationship with Dell and the Department of Small Business Development. In terms of our relationship with the Department of Employment and Labour, we have incubated for them the Innovation Fund, which they have now since handed over to the IDC. We are also managing on behalf of the Department of Employment and Labour the National Pathway Manager, and that was an initiative that came out of the Presidential Youth Employment Intervention. The work that we do is around focusing on the creation of sustainable jobs and in respect of the active labor market program that the Department of Employment and Labour is engaging with, we complement that work, Chair. Similarly, with the Department of Small Business Development, we don't work directly with SMEs. We work with intermediaries, and those intermediaries have the capacity, technical knowledge to meet a SME at their particular growth point. We don't on-lend money and make money available directly to small businesses. In the work that we do, we are also focusing, as I said, on sustainable job creation, sustainable enterprise development, and ensuring sustainable enterprise development. We know that you have to provide a package of support, and that package of support comprises not only of technical assistance, not only of access to finance, but also access to markets. And so we have tested those models, and to both the Department of Employment and Labour, Small Business Development, and other departments, we host regular webinars where we share the lessons that we have learned. As I said, we are not a mass employment program, and we want to achieve scale through ensuring that other departments adopt the models that we have demonstrated actually works. So there were questions about what measures do we deploy to ensure that we massify impact and scale. Chair, I said how we communicate what we have learned. And scale for us is the adoption of what works. Earlier on today, we have heard the challenges in our SOEs. We have heard about the macroeconomic challenges. all of these things impact on job creation. And if you're wanting to scale sustainable job creation, approaching it from a demand side of the labor market, then those macro issues have to be attended to, because that allows us to scale. If we continue to focus on short-term opportunities, we really are not tackling the real issue of creating increased demand in our economy. I have spoken about the geographic spread. As I've indicated, we work with intermediaries, and those intermediaries apply to the fund through a competitive process. And of course, we then, through our criteria, try to have a bias towards township economies and rural spaces. We've worked with, for example, with spaza shops, where we've created a backbone, an electronic platform backbone, business development support. More than 7,000 spaza shops have been supported, and the model has worked so well, Shay, that this institution, this partner, is now ready to move from grant funding and go and raise money in from traditional lending sources. On the issue of multiple funds, I agree, Chair, and I think that from a jobs fund perspective, what we've identified as key risks is the short-termism in government priorities, the misalignment with demand-led job creation principles, and the undermining of revenue-generating models. There is fragmentation, there is misalignment, and we do see program hopping between the various interventions. There has been a limited review of the work of the Jobs Fund as it relates to other employment programs, and it is still recognized that we complement in that our focus is on the creation of sustainable jobs and not just work opportunities. But what we have seen is that the way in which various programs are being incentivized, it is posing a risk, because, for example, in our models, what we want to see is that when we support an intermediary, when that intermediary supports the end beneficiary, that there is sustainability built in. Some of our incentives discourage that behavior. They discourage that those SMEs or those intermediaries earn revenue and therefore become sustainable. And so we are saying we have to be cautious, and there has to be a review of the incentives in a way that makes sense and ensures that there is complementarity in the way in which government makes available funding. Chair. Thank you.
I mean, let me appreciate the presentation, and I mean, I think there's one thing that is absolutely opposite, regardless of the questions, and you've placed some very important policy considerations that we've brought on the end, and I want to adopt those and be able to interrogate each one. I do think there can be no greater job in South Africa in our democracy today than the struggle to find South Africans working. Many people argue the case that we're a welfare state, and then I sometimes hear applause when people hear that we spend 60% of our budget on the social wage. And whilst I appreciate that that covers a plethora of things, I think the pathway to a country that prospers is to get more South Africans working. So that testimonial video is very powerful and impactful, and I think it helps guides where we go forward. Let me thank you. I want to, at this point, given the nature, we are in extra time, so soon some of us will be without jobs if we carry on at this rate. So what I'm going to do is I want the committee to be able to spend the last 12 minutes just considering the report that it had tabled for its own strategic planning, to consider that, adopt it, and then we can move it forward. I don't think there'll be massive discussion on the issue, and then we can move from there. So let me thank the team at National Treasury, and thanks to the team at the Jobs Fund. Where we're going to go from here is that I'm reflecting back. Some of the questions will be sent in writing, and then we'll take it from there as it pertains to the additional meeting that we'll have with National Treasury. So let me thank the team at National Treasury, and I will allow you to log off at this point, if you like, until we meet again in the next week or so. So let me allow that to happen. Mr. Makakula, thank you very much, and thank you to the team at the Jobs Fund. Mr. Makakula, while others are logging off, you had circulated to members a respective presentation. Given that this is not law in that sense, it is a strategic document that has to be submitted to the House Chairperson. I ask you to talk through in brief the overall document, just take it page by page. Members have had time to read it and have made their inputs. And so if there are any questions, we can entertain those, but I do think it can be considered and adopted by the committee. Mr. Makakula, are you able to do so?
Yes, Chairperson, I am able to do so. Mashila, can you please make me a co-host so that I can share the documents from my side?
Done already, my brother.
Okay, thank you very much.
Yes, yes.
Thank you very much, Chairperson. As you are aware, and honorable members, this document is the one that I presented in last week. So the only difference now, as I've said in that email, is the inputs that were made by honorable members on this document. So I will not repeat the document like in terms of like presenting it all, but I will go straight to the additional inputs that were made in the original document, which I've also indicated to the honorable members that I highlighted those inputs in red. And like I said yesterday, Honorable Chairperson, there are some areas where there are some contrasting views in terms of the contributions that were made by members. As we have seen in the original document, there were inputs from Honorable Whitelin and Honorable Bateman. But when I got like an input from yourself yesterday and the input from Honorable Kalega Mazibugo, she suggested some changes on the inputs that were made by the honorable members. So I'm now thinking we are disadvantaged by the departure of Honorable Wakilin, because some of those inputs that were made by Honorable Kalega Mazibugo speaks exactly to those inputs that were made by Honorable Wakilin. So I hope that when we discuss this document, he won't feel aggrieved if the committee decide that we go with what Honorable Kalega Masibuko has proposed. But I will go straight to those inputs, Chairperson. Without, as you can see when I'm just rolling out the pages, where you don't see anything red, there is nothing that has changed from the presentation I have made last week. The only changes speaks to only when you see red, I will explain what is happening. I will just roll down the pages, Chairperson, without wasting time. Okay. Chairperson, on the committee priorities, on the submissions that you've made yesterday, as you can see on those two red points there, one, you indicated on the need for us to develop that standard expenditure tracking tool in collaboration with the PPO, the rubric, if I can put it like that. So and then I've decided to say, okay, if that should be one of the priorities of the committee for this term, then it must go straight into our committee priorities, and it must go into the strategy. And then you can see when you go into the APP, I intentionally, but I will get your advice from this. I put this target at the end of the financial year, which is the last quarter, to say even if we do it earlier than the last quarter of the year, then it will be beneficial to us because we will have achieved that target a little bit earlier. But if we don't, then I'm putting it in the last quarter so that we don't find ourselves not doing it. But again, Chairperson, on the further and strengthening of the collaboration on spending reviews, the suggestion that you made, and then to say Parliament must be at the center of that process. We must not be bystanders and then watching what the executive is doing. I've put that, Chairperson, again as one of our priorities for the term, and then it also fits down to one of our strategic priorities, because the spending reviews, Chairperson, it can fall under the issues that in the first section of our money bills in our founding legislation, where it deals with about spending issues. So basically it gets catered there, the spending reviews, because as a committee we are mandated to look into any spending issues that are provided to the House by the executive. Honorable Chairperson, here in one of the strategic objectives, which is the catalyzing and enabling better linkage between Parliament's appropriated funds and expenditure outcome. You can see the point number one there was expanded by a contribution from Honorable Kalega Mazuwa to say informed monitoring of expenditure patterns must include the quality of expenditure and the overall reduction of government underspending. I've put it as she has suggested it. Again, Chairperson, she also suggested that we put the monitoring and performance of national government transfers to provinces, Chairperson, meaning that once we pass the budget, which is the division of revenue bill, and then honorable and the appropriations bill, because it also has some grants, Honorable Kalega Masibugo proposes that we quarterly monitor how National Treasury transfers these funds to both provinces and local government. And then by doing so, Chairperson, I thought that we should be able to be in a position to know when National Treasury has not transferred some of these funds for reason that they can advance at that stage. And then the other following points from there, Honorable Chairperson, they were proposed by Honorable Waklin and Honorable Baitman. However, Chairperson, on these points, Honorable Kalega Mazibugo felt that these 2 points that I've highlighted here, the monitoring consequence management in relation to unauthorized, irregular, fruitless, and wasteful expenditure and other financial audit concerns raised by the Auditor General, and then the quarterly review on National Treasury's response on consequence management and in relation to the same, which is unauthorized, irregular, and fruitless and wasteful expenditure. She felt like these points should be excluded from this report. She said she will be able to advance her point. But what I can tell you, Chairperson, I said this thing last week when we were doing, when I was doing the presentation themselves, to say, when I was now like responding to some of the questions from members, to say, the issues of unauthorized, irregular, and fruitless wasteful expenditure are issues that reside with SCOPA. In addition, the issues of consequence management, again, those are the issues that reside on the mandate of the Standing Committee on Public Accounts. And the issues of them, what do you call them, the issuing of debt certificate, those are the issues that can also lies on the mandate of SCOPA and that committee, that Standing Committee on the Auditor General. So I agreed to a certain extent, but I thought it was important to include all the submissions of the honorable members so that members can debate these issues and then we come out with one document, knowing that if I have not included it myself, we could have gone back to the issues that was raised when we were dealing with the appropriations bill. I don't want to go back there, but I included everything, but I made a comment, if you saw my comment there. These points were proposed by Honorable Watlin. However, Honorable Mazibugo, Kalega Mazibugo, is of the view that they should not form part of this report, and she will justify it. And then she never told me what was the reason, but she will talk it for herself, Chairperson. But again, like I said, I felt as well, I feel that these points should not be in the report because they reside on other committees of Parliament. As I have said, we can't be everywhere at the same time. Other committees of Parliament have got a responsibility, and collectively, all the committees of Parliament represents Parliament. So, Chairperson, we also added the points on the quarterly review of reports delivered by National Treasury on the implementation progress recommendation by the committee. Meaning, Chairperson, this is basically, this point speaks to the issues of recommendations that we've made. And then it was emphasized last week in our presentation that on Wednesday that we need to begin to follow the recommendations that we made closely. with National Treasury. They must report to it. As we made the recommendations, if we said we must get quarterly report on those recommendations on the bills, that point speaks to that exactly. And then the quarterly progress report on SASSA turnaround strategy and the successful implementation of the national recommendation made by National Treasury on SASSA on the appropriations bill. Chairperson, this point speaks to the conditions that were set by National Treasury and the challenges that National Treasury identified around the issues of SASSA. And then this point suggests that we need to have like a quarterly report on saying what SASSA is doing about it, and exactly are they turning around it was National Treasury envisaged in those conditions that were imposed on the 2025 appropriation bill. Progress report, quarterly progress report on the SASSA administration. As Chairperson, you are aware, we have met like the administrators of SASSA in one of our meetings. So this point then suggests that we need to quarterly get a report to say what are the administrators doing, what progress have they made on the issues that they were first put in that institution to do, whether are they succeeding or not. We need to get those quarterly progress report. And then another one, Chairperson, this point that I've highlighted here, it's one of the point again where Honorable Kalega Mazibuko, it was proposed by Honorable Waklin, by Honorable Waklin, but Honorable Mazibuko, Kalega Mazibuko feels that this point should not necessarily form part of our strategy. And then she will explain, because this point, Chairperson, it reports to the quarterly review and reports on all government agencies, national, provincial, and local government agencies, and international missions that don't add value for money to South Africa or the current government of national unity. Like I said, I put all the points as honorable members has suggested. I want honorable members to debate these points. I will be guided by all of you. And then the last point that was made by Honorable Waklin was on the quarterly reports on the public sector wage bill, productivity and output, and the review of white paper on local government. In fact, this point was made by Honorable Kalega Mazibuko, and the review of the local government fiscal framework. And then this point, Chairperson, in one of our strategic goals, initially you will recall that it was a public infrastructure expenditure underpinned by value for money and positive outcomes, after which Honorable Waklin, Honorable Bateman suggested that we remove the infrastructure so that we encompass all the expenditures that we need to remove. So I've done so, Honorable Bateman. I've removed the infrastructure on the strategic goal so that we can encompass all expenditure. We're saying just government expenditure must be underpinned by value for money and positive outcomes. And then another point, Chairperson, that was suggested by honorable members was on the expenditure, on the value for money, on expenditure and positive outcomes. On receiving comprehensive report on spending and progress made on all projects funded through the PFI, which means we request National Treasury to provide, when they do the quarterly expenditure report, to report on the projects which are funded through the budget facility for infrastructure. And then all government funded employment programs, as we have now received the report on the jobs fund. That point speaks to that, Chairperson. And then I will go down again to check where
Mr. Makakula, let me pause you there. Okay. Because I think we've just got to clean out the section. I can see where the differences lie. I don't think they are that significant. I think we can dispense with certain issues quite quickly. Yes. Maybe if I can allow Honorable Kalega Mazibuko, you have raised points and Honorable Makakula has reflected on those. And Honorable Bateman, in the light of Honorable Wakelin not being here, I'm going to ask you to respond to some of those. But from my reading of the current structure of the report, I take the point about infrastructure and looking at the broader. I think the multi-year wage deal can and how Treasury negotiates wage deal can remain. That's not something that can that I think we can differ too much on, because that's the. But I think as it speaks to some of the programmatic issues that you raise, that consequence management, etc., is really a function. What I'm really trying to dissuade us to be is a committee that deals with the mandate of other committees. And the Standing Committee on Public Accounts really does deal with some of the consequence management issues. Ours is to not deal with probity, but performance in that regard. So I think that's the school of thought we come from, because otherwise we could be a committee that does all other committees' work and then we get lost. Honorable Kalega Mazibuko, I don't see your hand, but if you want to raise any additional point, or Honorable Bateman, is there a member who would like to speak on those points? Because I'm persuaded by the argument that says some of these things sit in another space.
Thank you very much, Chairperson. I was getting into the bus, but I'm my earphones. Yeah, I'll Mr. Makagula and yourself alluded. We think as the African National Congress in this committee that chair, the proposed addition on monitoring consequence management in relation to unauthorized, irregular, fruitless, and wasteful, which is UIFWE, and other financial audit concerns reported by the Auditor General or that come to the attention of the committee is misplaced, Chair, as the Standing Committee on Public Accounts, as Mr. Makagula has correctly said, and the Standing Committee on Auditor General deals with the proposed addition that the members have added. And also, Chair, quarterly review of National Treasury report on consequence management in relation to UIFWE and audit matters as reported by the Auditor General. Again, Chair, or lastly, we feel, Chair, that quarterly reviews and reports on all government agencies, national, provincial, and local government agencies and international missions that don't add value for money to South Africans or to the current government of national unity. The member, Chair, who proposed the matter has to clarify which are the government agencies, national, provincial, and local government agencies and international missions that don't add value for money. Is it a committee position, Chair? I think we need to be clear on that. Or the members' view that they are organs of the state that don't add value. To own up to what we are adding here as the committee, instead of this political perspective, Chair, as the focus, the committee should focus on spending reviews, which will also assess whether organs of state or some of their functions are not adding value. So that's my addition or my motivation on my request to remove these additions. Thank you very much.
Oh, thank you. Honorable Bateman, I'm not sure if you've got... Honorable Kamete, I saw your hand, but is there anything you want to raise there? Honorable Kamete?
Yes, Chairperson. I'm sorry, I was looking for a space where I can stand. Can you see me?
Yes, we can see you.
Oh, okay. No, thanks very much, Chairperson. No, Chairperson, I won't take much of your time, but let me just quickly mention a few things in the documents that I wish they can be at least corrected. In the document, there is in both the titles, there is a title there of title references. If they can correct the spelling, the other reference has got FWF. I mean REEFF. If they can change to the correct one, and also correct the inconsistent formatting in table of context. The technical issues, I think if you can remove visible comment, makeup, and also editorial notes throughout both documents. Clean up as insertion there and there, checking marks that makes text difficult to read. And also, I think there is that stable standardized dates reference like 22 in other document you see 2025, and in others you see 2020, 2021. Other areas, I'll send it to the secretary, like I said, Chairperson. I just wanted to touch on those ones. I will send it to the secretary so that you can see my input. Thank you very much.
Honorable Kameda, today was set up for the cleaning and the formatting. Mr. Makakula, I'm certain you are going to do, so that work will be done. I want to say today we finish all the content, so therefore we want, otherwise we might as well just have a rolling, let's keep adding to the content. I want to resolve the question that Honorable Gallagher Mazibuko has raised as it pertains to some of the inputs. I am persuaded by the view that says that the spending, when it looks at certain items about consequence management, that in essence does sit within public accounts in that regard. So the 2 bullet points that are in the document, I agree, need to be removed out of the document. The only point I would add is that given the point that Honorable Gallagher Mazibuko has raised, the issue is who add value. And I would remove that conversation because that is subjective. What does adding value or not? But I do think reviewing of agencies and missions as to their alignment to South Africa's strategic priorities is an important component because, as you would have heard in the presentations today, even on National Treasury, they raise issues such as the cutting down of foreign missions, the salaries of foreign missions as an exchange. Now, they are already doing the review themselves, but Parliament does not have a view on it. Can you have a mission in Kazakhstan relative to one in Washington? These are questions that are in consideration. So the value question I would remove in text, but I would argue that the review of agencies and missions need to be aligned to the strategic impetus of what South Africa is trying to achieve. Otherwise, all of these agencies, NYDA, and I can list many of them, receive disbursements on appropriations. And I do think there's a danger in not being able to monitor that. And they end up, because that's the simple way executives are able to set up agencies, dispense funding, and we have no line of sight in this regard. Honorable Bateman, and then we need to move.
Thank you, Chair. If Mr. Magagula could just scroll up slightly, and then we can just go through the previous page, and then so let me respond. Yes, I'm comfortable with the removing of those 2 points. I do think that as a committee we should be in touch with what SCOPA is doing. I do think it affects how we look at the budgets to know what the state is with regard to the unauthorized, irregular, fruitless, and wasteful expenditure. It is relevant to our work, but a quarterly monitoring, I think, is not necessary. But I think perhaps we could have an annual update, even if it's just a written report or something like that, to give us an idea of what the work is that's being done. Although I suppose the committee might also be of the view that SCOPA provides that anyway in the ordinary course of doing its functions. So I think I'm happy to remove it. I do note that we come back to this document potentially every 6 months, is it, or every once a year. So if my colleague Honourable Wakeland disagrees, then we will have the opportunity to put it back on the table and have a further discussion. And I don't want to hold this up further at this point. So that's fine to remove those 2 bullet points, which I think are also the same point, just said in slightly different ways. I think the point about the superfluous government agencies, departments, public entities, I don't think it's quite been captured correctly there, because it looks like we're wanting to do a report on each one of those every quarter, which is not actually what we meant. So I think what we should do is just amend the bullet higher up about the spending reviews and just say, including the review of potentially superfluous government agencies, departments, and public entities. That just, in other words, when we look at the spending reviews, we're also looking at this. It's a sub point of the spending reviews that we don't want to lose track of, which I think is what you were saying as well, Honourable Chair. So I mean, I would agree with you on that. I don't know if we want to act on that quickly. I have one further point to make on this section.
If you can just make the last point, because I can see it might take us a lot longer than what I initially thought, and our committee is running a little bit longer. So if you make the point, yeah.
Okay, so my last point was simply, okay, so that point, just to reiterate, was I think that bullet point has been not really capturing what we're trying to say. The point there was just the rationalization of unnecessary public entities as being, and monitoring that as part of our function. And then my final point is, quarterly reports on the public sector wage bill, productivity and outputs. I think what we're missing something there, which is that from a appropriations committee perspective, the excessive and uncontrolled growth of the public wage bill is what we are particularly concerned about. And there have been various conversations and suggestions and recommendations that have been made around how we can actually contain that and address it. And I think what we're looking at here is a report from National Treasury on how they see this, what they're doing, and what are the steps that are being taken. So I think it's not just about, well, what was the spending on the public sector wage bill? It's more around how are we grappling with this major spending issue, and what steps are being taken in terms of the follow-up. It is an overlap to some degree with the point higher up about them providing us a quarterly update on all of our recommendations. But it's got its own bullet point here because it is such a significant issue on its own that affects our overall health of the fiscus. So that I think we need to just amend slightly. We need to expand a bit what we mean by quarterly reports on the public sector wage bill.
I think that to put it at monitoring is enough, because what I don't want to do is make a debate about what is bloating, what is not bloating, because then what I'm trying to allude to is that for example, is that a headcount question? Is it a salary question? Because by headcount, the South African public servants have remained relatively the same as 94, but on salaries, there have been multi-year wage deals, so they enjoy an above inflation issue. A strategic document itself doesn't talk to the nuance of that. I'd rather speak limited to what is being monitored on the public sector wage bill, because I have raised it in the budget forum to say, how you negotiate these things, you can't reach an agreement and then ask the fiscus to pay later. But I want to cover it.
Sorry, Chair, if I
may. But what Honorable Makakula, yes, you can respond.
I just want to say, because we are dealing with a strategic document that in that way, I don't want to explain it much. Some of the issues, Chairperson, they become relevant because all the institutions, when we invite them, you specify, your office specify exactly what points they need to talk to, which man it's on the operational side. So some of the basic points, they don't necessarily have to come into the strategy themselves, but they then get operationalized when you write to this institution. Otherwise, we can't write everything that you plan to talk with this institution throughout the year. When you write the letter, then you operationalize the points. Then you bring it clear with exactly what is it that you want.
Absolutely. So can we, to this point, rephrase that third point about the multi-year wage deal, remove the 2 bullet points? I acknowledge Honorable Bateman, if you can. Yeah?
What do you want me to put it, Chairperson? I want to write it while we're here.
No, what I'm saying is we're removing the 2 points and the point you've just highlighted.
Yes, I will remove those. And then what are we saying?
Here is that if you make the text a little bit cleaner and shorter, it's a strategic document.
Okay.
So
that's
let's do. Can we keep going further down? If we can move off from this, and I think Honorable Moali's inputs will then follow on from there, because they will go into some of the textual and presentation issues. But if we can just keep going, that will be helpful.
Sorry, Chair.
Yes, Honorable Bateman.
So the reason my hand is up is I think on the public sector wage bill, the key thing here, which we're trying to highlight, is actually around the reform of the processes that are happening. In other words, there are some systemic weaknesses that have got us into this place where we are, where headcount has been down, real wage growth, headcount down, because the wage growth has been above the growth of the economy, etc. And we have to look at the processes that have actually have got us into this place. And National Treasury needs to be taking the lead on that, because it's the fiscus ultimately that they're responsible for, that's at risk because of what's been happening. And we need to hold them accountable. So I just want to get that point across very clearly.
Can I ask you just on text, just put a short, I don't disagree with your sentiment, but just let's put the text on the table.
Okay.
And then I think we're covered on the infrastructure conversation. As Mashile, can you keep going down? Just
But Chairperson, yes. So these are the only two I've already highlighted on this point. And then with exactly now, Chairperson, then it means by implications, because now we are going to the indicators. Then
all
it
right.
means but it means by implications, the points that we agreed that I'm gonna remove on top there, because they also become now they've got like performance, like they've got the indicators, these indicators like here.
Yeah.
So I'm going to remove those indicators because we agreed on
Correct.
top of that.
Correct.
And then, of course, on the issue again of the public sector wage bill, I will rework the sentence and look on those reforms. So that's all. It's only on the indicators. Now, again, here, if you can see, Honorable Bateman and Honorable Chairperson, I have removed the infrastructure to cover the overall expenditure on the performance indicators.
Correct.
And then I have added the issue again, which you saw on the strategy above, on the issue of the report on the BFI. And then, Chairperson, I've also added that indicator you suggested on the issue of us collaborating with the BPO on developing that standard expenditure tracking tool, that rubric. It's now
Correct.
reflected in red. So basically, on the strategy itself, that was that. And then the last point, which was submitted by Honorable Bateman, was to remove the things that you see that I've deleted here, like to fast track economic transformation, economic redistribution. And then he suggested that I put that improving the quality of life requires that government, when you see the red stats, prioritizes measures which foster economic growth, job creation, and education in order to improve the chances of government achieving its policy objectives of reducing unemployment, poverty, and inequality. That's what was suggested by Honorable Bateman. I put it as suggested it.
I would remove the word "the chance" because it sounds a bit nebulous, but the strategic objective, it is pretty much government standard strategic objective. It's not the chance.
Okay, I'll remove the chance.
I would replace it with strategic objective of government.
Strategic policy objectives. Is that fine? Okay.
Correct.
And then it's on the again, Chairperson, on the risk. These are the risks that we highlighted at that time. I didn't have much addition. Safe to say again, as I've done on top there, I have removed the infrastructure in this so that we cover everything. And then we go down now to the last one, Chairperson. You can see with now the budget, it's reworked a little bit. Basically, these are the estimates that were given by Parliament on the proposed distribution of the 3 million that is allocated to us. And the Chairperson, for the outer years, I mean, until 2029, unless you guide me, given what we have learned for the past 3 years or so, we have never had increases in the budget baseline for most institutions, including Parliament, by the way, except that Parliament, if you see that now changes on its baseline, it's because of that infrastructure that is being revamped there due to the fire damages. Otherwise, generally, the baseline is still the same. So as long as we have not observed any increase in economic growth and all that, I'm not anticipating that we can get any baseline increase. However, because this document will be reviewed every second year or so, if there are changes, we will update the budget accordingly. Otherwise, these are estimates and numbers. We are working in 2025 in 3 million, and then we have not been given anything as an indication going forward. So these are estimates. That's where we are, Chairperson. But the accurate ones are the 2025 one, because the 2025 one, this is what Parliament envisaged to spend on this committee, on these different expenditure line items. So that's all, Chairperson, for the strategic document. And then basically, Chairperson, if I can open the APP. Let me open the APP quickly, Chairperson.
Yeah.
Again, Chairperson, here, if you can see the APP, because it's just I will, for lack of a better word, the transportation from what we've agreed on the strategy to the APP, the changes are the same. They are the same. So if we go down, I will go down quickly. Again, if we start here, Chairperson, as we did in the strategy, these are the two priorities that we add now on the APP. Just take them as they are from the strategic document. Equally so here, Chairperson, it's the additions that have been made by members. As you can see, the highlighted points here are the ones that we've since agreed to remove from the strategy. It will follow then so that they are going to be removed from the APP. And then it's the same as this point, Chairperson, to say, okay, you want it reworked, and then we are going to do the same. All the points, Chairperson, as suggested, they are the same in the APP. The only difference that we've done, as I will show you now, it's on page okay. What Honorable Kamete was raising, Chairperson, if you can see on the APP, these things had already been changed on the documents that I've sent you yesterday, because I highlighted in the presentation last week that I've realized that some of the years are not corresponding, so I just have to change the years. So I've done so on the documents that I've sent yesterday. But now you can see, Chairperson, on these strategic objectives of catalyzing and linking ensuring better linkages between Parliament appropriated funds and expenditure outcomes. Now I have now inserted that proposal of the development of that standard expenditure tracking tool, that rubric. And then, as you have seen, Chairperson, I just put the target, because we are going to have one rubric and then it will be one document that will guide us. I've put it on the last quarter of our year, so that should it not be already we have passed the first quarter. So should we not finalize it? I'm hoping that in collaboration with the PPO, as we have discussed with the director of the PPO, if it is not finalized in the next third or what, I'm hoping that it will be finalized by the fourth quarter. But of course, if that rubric is not finalized by the fourth quarter, ultimately it will have an impact on the achievement of our targets. And again, it follows that the issues that we talk about, the issues of infrastructure, removing the word infrastructure so that we cover everything, I have removed it from the APP. And the years, again, Chairperson, I have already changed it, as Honorable Kamete was suggesting. And then, Chairperson, another different thing now is just that is the budget. This just show you where we are, Chairperson, to say how much have we spent by August 25 on our budget, on that 3 million that we have. And then it tells you on the last column, basically, how much budget we have as at the end of August. So whatever expenses that we have incurred since then, they are going to be adjusted. So this is basically the distribution of how the year's budget looks like, Chairperson. So there is not, again, it's nothing new. It's just the distribution of that 3 million. From my side, that's all, Chairperson.
Thank you very much.
So sorry, Chairperson. One last thing. Once members have proposed to adopt this APPN strategy, and then I will reclaim it and then send it to you, and then from your office, which doesn't have an impact on whether we adopt or not. It's the overview from the Chairperson. Your overview is your overview. It cannot be debated in this committee. So once that, and then once the final document that goes to the House Chairperson, we will share it with the honorable members with your overview, which has got no impact on us adopting here or not adopting, because it is your overview. It's not going to be edited by anyone. Thank you very much, Chairperson.
Thank you, Mr. Makakula. And I think, honorable members, looking around here in the room, I think the room is still relatively quorate. With those considerations and the cleanup and the sending back of the final Can I ask that, because we are not going to adopt any further inputs, these are just textual questions. Honorable Bateman, thank you for the input you have made in the WhatsApp group there. We'll put it in the committee document. I think broadly speaking, we've captured what the various political parties have said and we've incorporated them. Can I ask that if there's a member who will move that we adopt and adopt the report as has been put both on the APP with all the respective changes that go. So the member would do that.
So, sorry, Chair, to intercept you.
Yes.
Sorry, just for a process issue, we adopt it one by one. We don't combine them. We first adopt the strategy and then we adopt the APP.
Okay,
So
is the member move for the adoption of the strategy in terms of discussion? Honorable members do so. Honorable Skete, I see your hand.
No, thanks, Chair. I move for the adoption, Chair.
Thank you. Is there a member who would like to second the adoption?
Chair, before that one, may I, sorry for interruption, Chair. Are we on the strategy or the APP first?
Strategy.
Strategy. Thanks. Sure.
So Honorable Skete has moved. Is there a member who would like to move for this? Who seconds Honorable Skete? I don't see any hands. So let me just double check here. Honorable Bateman, I'd assumed that you had made your inputs, they'd been captured.
Hi, Chair. Yes, I have made my inputs. I think from my perspective, it would be helpful to have a fresh, clean copy to be able to have a look through. So I'm not going to oppose it, but I'm not keen to put up my hand to second.
Okay, that's understandable. But for us to be able to get to that point and get a clean copy, it's not like this report will be changed post facto. It is what it is, and the inputs that you've made will be cleaned up. So maybe let me ask honorable members, if there's another member who would like to second the proposal made by Honorable Skete, Honorable Siate, or the members I can see here, or Honorable Mkonto, any other member there.
I second the move, Chair.
Thank you, Honorable Mkonto. We will take it as that. Mr. Magakula, if you could clean up the document, we will circulate it back. I can give the committee an assurance that as before we send it even to the House Chairperson on the strategy, but you will be furnished with it. May I move then to the APP with the given considerations? Can I ask, is there a member who would like to move for the adoption of the APP? It's the second part of the document. I don't see any other member. Honorable Siate, you've been silent. You've made your inputs here. Honorable Skete, I see your hand is up.
Together, Chair, I move for adoption.
Thank you, Honorable Skete. Is there a member who would like to second the adoption of the report? Of the APP, that is. Honorable Mkonto, it seems like I will be coming back to you.
I second, Chair. Thank you.
Thank you very much, Honorable Mkonto. Mr. Magakula, may I request that you clean up both documents? I will then accordingly sign them, circulate them, and write an overview in this regard. Would that work?
Yes, Chairperson, it's a small thing. I will still circulate the documents to you today so that you make your input, sign them, and then the final report that will go to the office of the House Chairperson is the report that will be copied to the honorable members of the committee based on our discussions today. So, but I will send it to office still today.
Thank you very much. Honorable members, in the light of that, I want to close the meeting. Just by way of announcements, we are having difficulties. Our overseas study tour to Brazil we're just dealing. I will be this afternoon. I've already sent a text to the House Chairperson and the Minister of International Relations to expedite processes on that side. So that's one aspect I'm busy dealing with. So we will send some confirmation. And the second is, as soon as we've got confirmation from National Treasury, it may be that next week we meet early morning, like at 8 a.m., to start the meeting because it's virtual, so that we can cover the aspects of National Treasury and then proceed from there. Does that work for all honorable members? So we will, by the end of this week, send out both notification, at least on the program for the committee for next week, the inclusion of the National Treasury. The letter will be sent to them this afternoon, and then we will go from there. Honorable members, in the light of all of that, I don't think there are any further announcements, Mr. Mawani. Are there any other?
No, sir, except for the fact that next week we are scheduled to meet with the Department of Social Development as well as the Department of Health on Tuesday.
Thank you. Much appreciated, honorable members. It has been a marathon meeting. I wish you well. Fortunately, the House only convenes at 3 p.m. today. I wish you a great day.
Thank you, Chair.
Thank you very much. Meeting is adjourned.
Thank you.
Thank you, Chair.
Thank you.